Hey, hi everyone. Good morning and welcome to our live show. Cube Gift Vikram, Bhai Hu Tera, welcome. Good morning. Thank you so much for joining. Doing good. Thanks for asking. Hope you are doing good as well. Big day, guys. FOMC today afternoon. Lots of earning. Microsoft, Google, Meta, they report earning. Tomorrow, Apple, Amazon, they report earning. There is a GDP data. I think today, did it came out? GDP data? Nvidia going crazy with all those announcements, almost hitting 5 trillion market cap. It finished at 4.89 trillion market cap. Apple hit 4 trillion market cap. We are living in rainbows and sunshine world, guys. Everything is super good, super rosy, no room for error. Everything which there was a movie in India, Jab We Met. Now onwards, anything which is going to happen, it will be the best. We are going to kill it. No room for error. It is that kind of a situation in the market. From now onwards, whatever will happen, it will happen good only. You don't need to worry. Everything which could happen bad has happened bad, and it is behind us. It's all in the rear view mirror now. We are in that world right now. Yeah. Yeah, जब we met, there is a dialogue, right? Company was in distress, band baj gayi hai, everything is bad. Now onwards, whatever will happen in the market, it's all going to be bullish. So we are in that world right now. Can't see anything bearish. So be careful, guys. Don't get sucked into all these things. Stick to your strategies, stick to your rules. Whatever you rules have you for your investing, swing trading, intraday trading, sizing. Don't FOMO. There will be a lot of opportunity between now and Friday. Just be patient. What do you mean by patient? I took like 3 trades yesterday. That is called being patient. 3 trades, but still made good profit. You don't need to push 10, 20 trades. You might end up with the same or even lesser profit if you do that. When you are not convinced with some moves, just be patient, be on the sidelines, take it slow. Oh my god, how do I prepare all this screen now for the Nasdaq, yes, Dow. Russell, okay. News is on. So we are well above our weekly expected move upper edge now in the Nasdaq. Where is it? Missing a level. 26, 145. It's right over there, hidden. Okay.
One minute now until we get the market on open imbalance. Ten seconds. Market on open imbalance. S&P 500 sell side 221 million. The Nasdaq 100 sell side of 23.4 million. Dow 30 sell side 76 million, and Mag 7 almost flat. Nvidia now becoming the first company to hit $5 trillion in market value. The White House now releasing a fact sheet on the deal struck in South Korea. Waiting for further information. So on this White House fact sheet on the Korean deals, Korean Air is to purchase $36.2 billion. These are in jets from Boeing.
So no jitters of 5 trillion so far for Nvidia, up 4%.
In 10 minutes time now at 9:45 a.m. Eastern Time, we get the Bank of Canada rate decision. Forecast is for a 25 basis point cut to 2.25%. We'd also get the Bank of Canada rate statement with this.
So pull back into that VWAP zone. Small pullback. So Russell starting to slip. Russell has been the candidate for short for last 2 sessions or 2 days for us. Yeah, it's slipping away fast. Spy trader, you know how how we trade now. Just discuss this trade with you, right? In the pre-market, look at that. All the levels working to the perfection, and the trades and the entries are coming from our level. This is our master's level, guys, right? This is rejection, NPL level, NPL level. Look at that drop now. All using our level. Tesla selling off right now, down 0.4. Meta has some sell, Amazon has some sell, Microsoft has some sell, but Apple, Nvidia, Broadcom and Google, they are pumping. You can download it from the Ninja Traders website. I think they have it. I'll need to see right if it is in the Discord or somewhere. I think it was in our education section somewhere. Yeah, DM me, candlestick cricket. I don't want to distribute like that. I don't have any rights to distribute some other softwares. DM me, maybe I can share with you. Where are the daily levels in members area? I don't see them today. Daily levels are shared, right? Why can't you see it? They were shared yesterday. Oh, well, let me see. No, they're shared. Here, they're shared. Masters new paradigm, 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 masters. Everything is shared. Just check under the post tab. You don't see for NQ? Gold, crude oil, Russell, Dow Jones, ES, Nasdaq is also shared. It is there. I can post it again if you want.
In 5 minutes time now at 9:45 a.m. Eastern Time, we get the Bank of Canada rate decision. Forecast is for a 25 basis point cut to 2.25%. We also get the Bank of Canada's rate statement.
It is there. I can see it is there. You want me to post it again? I can post it again. Okay, Wednesday NQ. Okay, yeah, it's there, guys. Yeah, it's way down there. It is taking a lot of time for me now to calculate. As we have gone super crazy, what we do for Nasdaq, yes, I am doing for SPY and QQQs also, and for the tech stocks. This is how masters look at. This is how SPY looks today. Crazy, right? Like QQQ also crazy. So yeah, guys, if you want to trade options, exactly what we do in Nasdaq, yes, same trade can be replicated using options in SPY and QQQ. So yeah, tag the VWAP. That's about it. That's the only pullback which has happened so far in the Nasdaq at least. He is still in the race to go tag the weekly expected move upper edge. Not a lot of room there. Oh, excuse me. Hmm.
1 minute remaining. I'll lead with the Bank of Canada rate decision, then move on to the rate statement. 10 seconds. Cut, 25 basis points cuts, 25 basis point cut to 2.25% as expected. So look into the Bank of Canada rate statement now. So half the downward revision from January reflects impacts of tariffs. The remainder reflects weaker demand caused by US trade policies. Bank of Canada inflation to average 2% in 2025, down from 2.3% in January, 2.1% in 2026, which is unchanged, and 2.1% in 2027. They note potential output growth is expected to slow to 1% next year from 1.6% in 2025, seen rising to 1.3% in 2027. They say the Q3 output gap estimated at between minus 1.5% and minus 0.5%, broadly unchanged. Nominal neutral interest rate is assumed to be in the estimated range of 2.25 to 3.25%. They say they cut rates again to support the economy through adjustments to US trade policy. That's according to their Governor Macklem. Macklem in the statement also notes that monetary policy has limited the ability to boost demand while maintaining low inflation, given the damage tariffs are doing to Canada's economic prospects. Macklem says by the end of next year, the bank sees the level of GDP at about 1.5% lower than forecast in January due to weaker demand as well as lost capacity. Macklem says we expect opposing forces on inflation to roughly offset each other, keeping the overall rate close to 2%, and notes there continues to be considerable uncertainty about US tariffs and their impacts. Range of possible outcomes is wider than usual. We need to be humble about our forecasts. So looking to the markets then, bit of a whipsaw in the Canadian dollar. Overall strength coming through though in CAD here. Another price target change for Nvidia, now Bank of America, raising the price objective to $275 from $235. We have also posted the Bank of Canada rate statement on the feed for those interested. Brings us now 10 minutes away from the top of the hour, where we get the US pending home sales change month over month. Forecast 1.35% on the prior 4%. The index saw a prior read of 74.7. Canada's 2-year yield is a 5.2 basis points up now to 2.406% following the Bank of Canada rate decision.
Russell catching a bid. NVIDIA reaching a daily projection. New paradigm member, check your NVIDIA daily levels. Yeah, Be careful guys, Dow could mark the top or ES could mark the top after it tags the weekly expected move upper edge. Dow almost home. Here's another weekly expected move getting delivered guys. Just another day in the office. Everything was still priced in. What we are seeing in the market, it was already priced in. We are just executing that.
In 5 minutes time now, at the top of the hour, we get the US pending home sales change month over month for September. Forecast 1.35% on the prior 4%, and the index saw a prior read of 74.7. S&P 500 extending gains up spot 4% now.
I heard many traders
Bank
who
of
were
America
buying.
also raised Apple's price target to $320 from $270.
Just shows that retail does not know anything, guys. I've heard many traders online, in past few days and weeks. I'll just buy one put for fun. There is no fun. You're always going to gift your free, money to the markets. Retail have no idea how more it could continue to go rally. Although in my members group I did try to show you skew, right? There was no expensive puts, were not expensive at all, which means big money was not buying puts. They are not worried here right now in this macroeconomic landscape we have right now. Rate cuts, all this AI boom. So there is no hedging from the institution, but yes, retail wants to hedge at the wrong time. They want to short, they want to buy puts just for fun and give their money for fun to the market, and market keeps ripping, rallying. Yeah, insurance was cheap. I have been trying to point out in my members group, skew out of money puts versus out of money call ratio. If you go and check, super inexpensive. If it is expensive, it will be here. If puts are expensive, it will be somewhere here. It is very cheap right now. Buy as many for fun. Nothing is going to happen. If something is going to happen, it will be already very expensive. So yeah, guys, unhedged, unfearful.
1 minute remaining. I'll lead with the pending home sales change month over month.
Star Wars. So what do the ICT guys do now? Keep watching fair value gaps. I'm sure there must be many gap to watch for them. 5 minute, 10 minute, 15 minute, 1 hour, 2 hour, 3 hour. Daily. Daily also gapping up. Forget the hourly, minute. Dailies are gapping up each day. And people about this put purchase,
10
they have been
seconds.
talking about since last 1 month or 2 months, guys. I have heard people talking about, market overbought, or whatever. Like, I went in
0%,
cash as well,
flat at
but at least
0, which is lower than forecast on spot 2%.
I went in cash,
The
100%
index is
cash.
74 spot 8, 74
This
spot
guy.
8. Noting a prior revision to pending home sales change, revised up to 4 spot 2% from 4%.
Yeah, I went in cash as well, but at least I did not short. I wouldn't short this. Yeah, with the FOMC or now with the earnings, something goes bad. Let it deteriorate, and then we have a foot in the door. But without any people are shorting at this top and it is making go higher. Yeah, absolutely. This is people who are getting squeezed. Somehow they feel market is overbought. They don't understand that it is squeeze in progress. They are the one who are fueling this rally by going short. Anyway, we are safe. We are happy. We had, I don't know, like nice outing in the market, whether it is sell off, whether it's rally like this. Yeah, you trade less. You have little bit less number of trade. You don't like score huge, wins, but yeah, small gains, consistent gains are still good when the market are in this kind of exuberance mode. There will be two ways price action returning to the market sometimes. I don't know, by this month end, year end, next year, early January, when people take profit, something will happen. At least proud that I'm not shorting this. I'm not fueling this rally.
We have posted the pending home sales change report for September on the feed for those interested.
You're not even buying it. If you're not shorting, you're not either long. That's fine. You buy. More power to you. You buy. I cheer. I be your cheerleader. You be the long, and I will be the cheerleader. But if you get stuck there at highs, don't come complaining. Okay. Yeah, one more rate cut, guys, in December. So this thing could keep pumping another 5%. Who knows? Until another rate cut happens in December, things could keep holding, rallying. So did we hit our upper edge on Dow Jones? Almost there. ES also almost there. Yeah, till Jan it can continue because people won't take profit now because it has tax implications. If they book profit in November or December month, they will have to pay taxes in June next year. If they sell in January month next year, right, they don't need to pay taxes until 2027 June. So experts,
Bank
watch
of
your level on
America
Nasdaq.
raises the price target of Tesla to $471 from $341.
So ES is yet to finish its, tag of the weekly expected move upper edge. So we'll have to keep this tight only because it could again go back up for ES to complete its weekly expected move upper edge tag. Here's the blood sucking stop loss eating candle, green coming. Anyone who shorted our expert level nailed it to the penny, Robert. There's always a level, there is always to the penny. See, what's the point, guys? If the market has a reaction and I don't have a level to mark the top like that, what's the point in plotting this many levels? Hey, and the thing is, you have to have skin in the game while you do the boasting. Make sure you also have a trade on and then do the talking. There's the short for you guys. Experts level Tuesday high to $26,326.75. Nailed it. They work, guys. They work each day. Right in front of you. It's all-time highs. You want to see how all-time high looks? Look at that all-time high. Is there a fair value gap there? No. Is there an indicator there? No. Is there a RDGD level there? Absolutely, to the penny. Hit the like button, guys. Spy trader, are you there?
US Treasury issues a license for Rosneft German arm.
You're there. So I took that trade on the QQQ. I told you, right? My strategy is designed to work not only with the futures but with the stocks and with the options. It's a three-dimensional chess I play. So here I am trading Nasdaq, giving you that beautiful shot on the live stream with the futures. Converted everything in futures in the stocks and in the options. Here's your QQQ shot exactly at the same spot. Look at that QQQ shot, and you could have traded one put there and scalped it and still be short on that trade. Now you know how you can trade options with the same level. Hit the like button, guys. Who does this? Like, you are witnessing something, as I mentioned, right? You're watching one, I told you, right? Looking at one chart doesn't tell you anything. What I am doing in the market is that in three dimension right now. not only with the futures, but I am taking this to the next level with the stocks, SPY QQQ, options trading, and this is getting more crazier, guys. If I'm going to be hanging around the internet, I'll take you to many different places with me. On the surface, it will be still prop firm trading and futures fluctuating. But behind the scene, there are many things, many layers to unfold. Yeah, on this tactical, I cannot give a call out, right? It's a tactical shot. It's not a very strategic, well planned. We have a level, you get a reaction, we took a trade, we come to the VWAP. It is not a trade you plan like well hours in. You did not see the export level, it was there. It was there for everything. SPY QQQ also I have shared now with the new paradigm members. So this is Nasdaq, right? I am trading Nasdaq. Habiba, the level we are showing is for Nasdaq. You have level there on the Nasdaq, Tuesday high too. Yes, NQ high 2 is there, Tuesday high 2. 26.3, 26.75. It's been there since more than 24 hours ago. Look at that. More than a day ago, you have 26.3, 26.75. 26.3, 26.75 is the short. It's all there, guys. That's the crazy part, right? The numbers, the level, the analysis is given to you well in advance. At the last moment, we don't go scratching, looking for the analysis level, drawing trend lines. It's done well in advance. No matter if it's all-time high, no matter it's a small range, no matter it's a sell-off, the strategy works, expands, adopts in each market condition. All-time highs, range-bound trading, no movement, more movement, double movement, half movement, stocks, futures, options. I heard Bitcoin trading is coming to the prop firm, guys. You guys are going to kill me. I want level for the Bitcoin now. I trade Ethereum. I trade Doge. Give me the levels. You want Bitcoin levels? Samba, thank you so much for shifting to masters. Yeah, guys, spend some time in the masters. I wouldn't, advise staying in the weekly levels, guys. This is I'm still waiting for that, podcast. What is your biggest regret? My biggest regret is I knew this concept. I was using this. I stayed in my weekly levels for 3 years. It's been 1 year now. This December will complete 1 year in daily levels. 1 year now I have lived with my daily and almost 10 months with the masters. It's 1 month old baby with new paradigm now. And look at, the kind of, craziness we have created in the market. This 7 level dip I go in the market, not only with the stocks, but also with the options and futures and everything together. Again, guys, futures, they were created for the hedging purposes. Future, we play it as a video game here. People play it as a video game. It goes up, it goes down, it fluctuates. I win, I pass the evaluation, I make the payout. I make the payout from the 10 account, I make the payout from 20 account. I'm the biggest payout of the month, I'm the biggest payout of the quarter, I'm the biggest payout of the world. I'm the biggest trader. Hey, that is all sideshow Bob thing. Where's the market? Where's the concept? Where are the bets? Who is buying stocks? Who is buying options underneath the surface? People forgot, guys, because of this prop firm and this future trading, forgot everything, right? How the market functions. There are products being bought underneath the surface. There are companies, there are real businesses. Warren Buffett, all these things, all crap, right? Forget about. I just want to trade NQ futures. I want to pass my evaluation. I want to make my payout. This is sideshow Bob. This, what we do here in the background, this is the real deal. Okay, this is how market functions behind the scene. This is what we do. This is the amount of preparations you have to do one night before. This is the level of depth you need to go in the market before you come and trade and punch long and short in the future. This is the update we started last night. This is 1 day ago. This is like 13 hours ago. 13 hours ago, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Stop the madness, RDGD, and then you come and punch a trade here. But I passed my evaluation and I got a funded account with that trade. Okay, good, very good. Congratulations. Biba, yes, you have to watch the videos, guys. As I mentioned, right? I am not asking you to do this kind of extensive work analysis, but at least watch the videos. All these things are explained in the educational video. As a master's, you should have watched our 3 weekly videos, that blue background. And experts level 1, 2, 3, 4, it's all explained. You have to keep your levels until Friday on the experts and on the weekly. Masters, you need to update the levels daily. It's all explained in this video, guys. There are playlists created to watch those educational video. It's total 2 hours of watch those 10 videos. Watch those videos in the sequence 1, 2, 3, and then 1, 2, 3, 4, and 1, 2, 3. Again, go follow this playlist. First members, then experts, and then masters educational videos. There should not be any such misunderstanding. Yeah, so you keep your weekly and daily levels on your chart, okay, until Friday, because they are there for a reason. They work throughout the week. Masters level, you need to update because they are current order flow, so it changes every day, right? Every evening I update them. Sometimes I update twice in a day. Masters and new paradigm level, you need to change every day as per the latest update. But experts and the members level, they stay on your chart for entire week. Ishan, yes, they are updated every evening. Sometimes masters level can take time to catch up. That is the reason we have experts and the weekly level. Okay, so sometimes people get confused. Hey, but the levels are far apart. The price is here. Yeah, because masters level and new paradigm level are based on the order flow in the market. We are at the all-time highs. Sometimes I need sufficient number of orders to go through the tape to build my level. So yeah, in those cases, you use the experts level. There is a fallback plan to go back to the experts level, go back to the members level. And once the masters level, new paradigm level catch up, you go back trading the masters, new paradigm along with the experts level. That is the reason we created so many levels. There was a need as a trader. There is a different calculation. There is a different logic in each of those concepts we have. They are not just for the gimmicky purpose that members, experts, masters. They are there for specific purpose in different market situation. That's the thing, right? Most of the strategies are static. They cannot adapt. Some strategies are good for range. Some strategies are good for the selling. Some strategies are only looking backwards, gaps in the back, right? If market is flying, which is most of the time, market will be at the all-time high. So what do? Don't trade because there is no fair value gap. So this strategy adapts to the sell-off, adapts to the range-bound trading, specifically adapts to the all-time high, which is most of the time the case. Look at this weekly chart. How many weeks in a row it is green here? How many weeks in a row we are going green here? Which means there is all gap. You don't trade if you don't have fair value gap. Yeah, on few occasions it will dip. Here you can enjoy your gaps getting filled. They say all gaps get filled. Yeah, after 6 months all the gaps will get filled. Wait for 6 months. Do not trade for 6 months and wait for that one sell off after 6 months to fill your gaps. So that there are limitations and many static strategy out there which cannot adapt, right? And this is why it took me 3 years now to develop a strategy which has everything in it, works in all the kind of market conditions. So what are we going to do now? Are you short, long? Can you talk about market? Stop advertising your levels. Okay, my bad. Still a long market is still a long, unfortunately.
In 10 minutes time now, at the bottom of the hour, get the EIA weekly inventories numbers. Crude oil inventories forecast is a draw of 0.899 million. on the prior draw of 0.961 million. The range sees a build of 2.5 million to a draw of 3.587 million. Gasoline inventories forecast as a draw of 2.05 million on the prior draw of 2.147 million. Distillate inventories forecast a draw of 1.853 million on the prior draw of 1.479 million. And crude Cushing inventories, the prior was a draw of 0.77 million. Keep in mind, last night's US API crude oil stock change showed a deeper than expected draw of 4 million on estimates of 2.9 million.
Oh.
In 5 minutes' time now, at the bottom of the hour, we see the release of the EIA inventories numbers. Crude oil inventories forecast is a draw of 0.899 million on the prior draw of 0.961 million. The range sees a build of 2.5 million to a draw of 3.587 million. Gasoline inventories forecast is a draw of 2.05 million on the prior draw of 2.147 million. Distillate inventories forecast a draw of 1.853 million on the prior draw of 1.479 million, and crude Cushing inventories, the prior was a draw of 0.77 million. Keep in mind we saw the release of the private API stock change last night. Crude in this report showed a deeper than expected draw of 4 million on estimates of 2.9 million.
Yeah, it opened actually at 5 trillion market cap. Blaze. It closed yesterday at 4.89 trillion. Today it opened at 5 trillion market cap. And good, it did not panic, it did not puke. Generally, when you have such a big historic event happening, like Tesla hitting 1 trillion, or Nvidia for that matter when it hit 3 trillion, or when Apple hit 4 trillion, it sold off. Sometimes this kind of a big event can mark the tops. People take profit, panic. Yeah. It held. In fact, this is what market had priced in, guys. You see Nvidia moving this up. This is what exactly market has priced in for today. This is the level for today in the new paradigm group. This is what I gave last night on Nvidia. So this 4.7% rally look like crazy. Guess what? It was already priced in. This is our daily range of movement in Nvidia today. This is what we were supposed to do. We exactly did that to the penny. Guys, I'm telling you guys, if you are in the masters, you are missing many crazy and amazing things we are doing in the new paradigm group there. Today again marks the new chapter where I'm able to do one-to-one mapping between your options trade and the futures trades. I just did a short here on the live stream on the Nasdaq. Same short was executed in QQQs. Whether you take shares or you go options, same short would have been executed at the same time what we did in the Nasdaq at the same time in QQQs. So yeah, I'm taking it like couple of notch higher with new paradigm group now. It went to 4 trillion 4 months ago. Yeah, just 3-4 months ago we were at 4 trillion. Now we are at 5 trillion. Which means you and me need to make a lot of money just being multi-millionaire.
1 minute remaining. I'll lead with the EIA crude oil inventories.
Is the old fashion now. Musk wants $1 billion, or how much? How much package he is demanding for next 10 years? Like $1 trillion, right? Musk wants a $1 trillion package in next 10 years. Nvidia wants to be $10 trillion as soon as possible. And you and me just happy with one home, which is not even a real asset. Couple of $1 million. That is so old fashioned. Got to make hundreds of $1 million.
10 seconds.
No, that is using the time right now. To manage money, I'm not going to be trading futures
A
entire life,
draw
right?
of 6.858 million. That's a draw of 6.858 million, lower than the expected draw of 0.899 million. Gasoline inventories, a draw of 5.941 million. Draw 5.941 million, deeper than the expected draw of 2.05 million. Distillate inventories, a draw of 3.362 million. That's a draw of 3.362 million, deeper than the expected draw of 1.853 million. And Cushing inventories, a build of 1.334 million.
No, that is not right,
Strength in
Ishan.
WTI crude here following that deeper than expected storage draw in crude inventories.
Options mapping or trading stocks and options, that is just a bonus. In New Paradigm Group, even the masters levels are significantly expanded. In masters group, I only go and check the daily order flow. I do the daily projection and daily order flow analysis, and those levels are built on the daily order flow. Projections are based on the options market analysis. But in the New Paradigm Group, I take it 2 notch higher. From daily order flow, I go into monthly and yearly order flow. So the number of levels go from 5 to 9. So you get 9 levels to trade futures market. So it's more extensive, more deeper analysis. And the bonus is, with that kind of a knowledge, with that kind of a hold in the market, you can do options, you can do stocks as well. Like here today, in this move in the QQQs, even in Nvidia, it was already planned in advance, it was already known to us. That's what exactly we did at the open. It's just more hours, more effort for me to I go as far as 1 month ago in masters group to do the order flow analysis, but in New Paradigm Group I go up to 1 year back, check all the projections, check all the strikes we had for those calls and puts bought and sold, where the volume was conducted, where the actual orders were executed in the market, where the big turnarounds happened in the market, where the major support, major resistance were there, and then build those levels. Yeah, in terms of my effort, I was done posting my updates by 9 p.m. in the night, by 9:30 maximum 10 p.m. Now since I started New Paradigm Group, I don't sleep until 1 a.m. in the morning. Like every update is like midnight, 12:30 in the morning. So are we ready to crack above? Market is, Broadcom is making the move. I don't think so. I mean, ES and Dow Jones, they are the one who should rally and get their weekly expected move upper edge. They are not. It's only Nasdaq which is getting eager to break. Would you please talk about edge in the trading? There are YouTube videos. I don't do all those things. I do actuals. It's a lot of hard work, man. That is for the gimmicky purpose. Edge in the trading, this that. If you're prepared well, if you're worked hard in doing all the preparation, you have planned your trade, your setups, you will be able to execute them. There are some nice videos, 40,000, 100,000 views. Yeah, I don't know how to do those videos. I would rather just put my head down, keep working, prepare, explain, be ready, and trade the market. A day in a life, my age, this is how. What is the other famous topic they use? I decoded the market. You open those videos and there is no decoding. It's like bullshit. Lame, not even worth like, elementary grade. Edge is there only if you are prepared and if you have done all the right things which have worked for you in the past. If you continue to do all those right things, you will win, keep winning. If you miss one single point, if you make one error, you will get hurt. So yeah, edge in my definition would be like whatever is your process, right? What have you done? Have you documented what you have achieved in 3 years in the market, 4 years, or 1 year? How long you have been trading in the market, right? I've been trading for the 3 years in the market. I have not let go anything, right? In 3 years, whatever I have learned, it's already captured. My strategy incorporates everything which I have learned in the market for 3 years. And I made sure I did not flip flop. Many came from the ICT, many came from SMBs, many came from the moving average world, many came from the Fibonacci world. Tried to tell me, show me something. I rejected them all. I have no interest in knowing your strategy. All I know is I want to put my head down. I want to keep working on my strategy, which I have. And now you can see, right, the madness has gone that I am not able to sleep until 1 a.m. in the morning for my preparations. And I come prepared in the market. If I don't do my preparation, let's say I have some emergency, I get sick, I will not trade next day. I'll maybe give bare minimum things, to others who are expecting some levels from me. I'll tell them, like I went for vacation once for 2 days. I did not do experts level, but I gave masters level to everyone. I said, in my absence, use this. You don't have extensive support, but you do have bare minimum support. You are the perfect trader I have ever seen in my 3 years trading. That's why I asked the right question to right person. Yeah, so I know it's a bit, I didn't give you the direct answer there, but this is all overrated, guys. The edge in the trading, or decoding the market, and or having a 100% win rate. You can be profitable even with the 60% win rate. I think in the market, the key is you keep track of your failures, especially. And if you have done something to fix that failure, you build a process, you build the rules, how you want to trade the market, how your day should progress. On a sell-off day, how you want to conduct yourself. On a rally day, what are your rules? On a consolidation days, on a range-bound trading, what are your rules? And you need to have everything, right? You need to have, like, a strategy, a plan, a rule book for every scenario. Up movement, down movement, sideways movement, no movement, sudden sell-off, sudden rallies. Half a market trading day, cash market is closed. How you trade, open, how you trade the afternoon, how you trade the close. There has to be a rule book and known scenarios documented for every situation. And the edge in my book, as I mentioned, right? If we have not experienced it, experience it with the smaller size proforma account, maybe paper trading account, right? Have a rule and then only trade the market. Without a plan, don't go in the market. I have seen only the insider trading has the 100% win rate. For the swing trading, I don't think so.
Bank of Canada's Governor Macklem now in the press conference says monetary policy is providing some stimulus.
Symbol I'm going to hide. Profits can stay here. So I have 46,000 US dollar worth of profit in last 1 year and 8 months. I don't have a losing trade. I don't have a losing trade. So starting January 24th, right? It can be a small profit, $100, $75. So I have like 520 trades taken in 1 year, 8 months. You can see it's anywhere between 7%. Those pink means I have crossed 30% profit. So 30%, 32%, 32%. Where is the losing trade? In the swing trade, how can you lose? If you're buying the good stock, good company, how you're losing? So over a period of 500 trades, I have zero losing trade there. And I'm buying, a major tech stock or an index or something, right? Why you will lose? So it's not true. Only insider I have 100%. In the swing trading, nobody, it's if you're buying a good company, why? You're patient to wait for a couple of months, couple of weeks sometimes if the stock is down. If you're buying crap, if you're buying penny stock, if you're shorting the market left and right when the market is going up, obviously you're going to lose. If you're I just go long in that portfolio, just going long when the market backs off, buy good company, hold. You'll make return. The return could be somewhere between 7% to 30, 40, 50, 80%. I think my highest gainer is 80% so far in 1 year and 8 months so far. Yeah, my biggest gainer is 70% or 80%. Nvidia, of course. And even with the futures now, right? With this new paradigm group, we have taken 47 trade. 3 trades were failure. They came in the first few days of starting the group, where we were still getting our feet wet, where we're still discovering what is the best setup strategy, what is our A+ strategy to trade. So yeah, 3 failures came during the time of high volatility and the initial days. It is possible. All you need to do is apply, have a good strong rule book, rule sets.
Macklem says the job is never done. I see elevated uncertainty.
Yeah, well done, Sanjeev. 28 average, nice.
And Bank of Canada's Senior Deputy Governor Rogers says the Canadian dollar is still playing its shock absorber role.
So the ETF deal on their fast
Rogers
track.
adds the Canadian dollar is behaving the way it usually does and how it is meant to.
ETF deal is about to end this Friday, guys. 70% off on their fast track accounts. So 70% off even on the beginner and experts, I think. They all end this Friday. So use the code RDGD. Here's the deal in the chat for you. So yeah, coming down, guys, into new paradigm level. VWAP just punctured right now. ES backing off.
Bank of Canada's Governor Macklem says consumption is underpinning economic growth. Bank of Canada's Governor Macklem says we expect the pace of consumption growth to moderate. Macklem says a material change to our outlook would not just be 1 month of data. Keeping an eye on the markets, the dollar paired gains now flat on the session here, according to the Dixie.
Russell I see now pumping. And yeah, Masters level again acted as a launch pad for that big move. Russell can move big, guys. It can get to the weekly expected move upper edge within one session. It has not done much this week so far. It's still at the midpoint. It can go to the upper edge by this way. FOMC interest rate announcement. It could be right at the upper edge of the expected move.
Bank of Canada's Senior Deputy Governor Rogers confirms that the bank is resuming treasury bill purchases in the fourth quarter. And Bank of Canada's Governor Macklem says equity valuations by many metrics look stretched. Bank of Canada's Governor Macklem says we could get 2 negative quarters, but that's not our forecast. And the press conference with Bank of Canada's Governor Macklem has now ended.
So break towards the downside. So guys, Tradify going for some crazy deal for Halloween. 45% off, guys, on the funded account, Lightning funded account, 25k, 50k, 100k account. 45% off. I think this is their biggest, best deal ever. Code RDGD ends after Halloween, October 31st. Check it out. I'll drop it here in the chat. Tradify, 45% off. Lightning funded account. I think the sizes are 25k, 50k, 25k, 50k, 100k accounts. I think this is the deal of the Halloween. Yeah, you're right. You have to like the business, you have to like the management, you have to be aligned with their long term futures. That way, you, no matter what people say, no matter what, especially analysts say, you can stay your course and win in the long term investments. If you buy based on some media outlet release, like, Google Chrome bug, Chat GPT, seriously, like, I called it out that time only. Like, yeah, it's good feature. Yeah, Google's product Gemini is also equally good now. Yeah, they had initial hiccup during the launch. It didn't go well. Google is going nowhere. Where's the Chat GPT fear? Like, they were selling Google during the Chat GPT fear, like, the company is not going to survive. I don't know whether it was here or I don't remember here, right? Or here. Look at where it is, Google right now. Yes, people are crazy, right? Analysts especially. Chat GPT eats Google Chrome for breakfast. I mean, nonsense. That was like such a stupid news. I called it out that time only. Yeah, it's okay, it's good. It can have, there can be some they can steal some revenue from them. Google stole revenue from Amazon Web Services. It stole revenue from Microsoft Azure by launching its Google Cloud Platform. It steals some revenue from Android by its Google whatever Pixel. It can steal some revenue from the automated driving to Venmo. Yeah, that is part of the competition. It's a free world. Anyone can compete. They can get even better than them. Yeah, all this even with Facebook Meta Cambridge Analytical scandal, like people thought like it's never going to recover from that scandal. Seriously, out of like 8 billion people, 7 billion people in the world, more than half of the population is on the Meta platform. Only because it is banned in China, else it would be entire world population on the Meta platform, either through Instagram, Facebook, WhatsApp, or whatever we don't know of. Everything under social media umbrella is owned by Meta. It's crazy, guys. People somehow they come up with some logic, some theory. I don't think understand the ground level situation, how companies function, how they sell their product services, what is their implication in the real world life. Yeah, some niche, some specific group, some specific audience, they have liking for a competitive product out there, and they think like it is going to be the entire world. Like as if Google, Amazon, they are like stupid, right? Building companies, R&D for this many years with that many billions and billions of dollars on their balance sheet, they are just like sitting idle there. So guys, people who are member, especially new paradigm members, make sure you join the Discord with your YouTube ID and get access to our master documentation and the new paradigm documentation and the call out section, because Discord is much faster in communicating the plan, communicating the call outs, or sharing the result, what happened, like this crazy finish we had documented. So the way you join Discord with your YouTube ID is explained in this video. Go under the educational video section. This is the last video here, how to view optional Discord member only channel. Watch that video, log in with your YouTube ID in the Discord, and if you still cannot see these additional channels after watching this video which I shared in the chat, you follow this under educational content section, this steps. Step 3, sync your Discord with YouTube and you'll start seeing this additional channel. Especially if you are a member on YouTube, you should see some additional channels, and that is where the call out and the updates and all the plan, like today Nvidia already played out, Amazon already played out, guys. Look at our new paradigm level, Pi Trader, Mindful Trader, Logic, Hedge Trades, whoever is trading stocks, look at the level, new paradigm level, point to point on Amazon, Look at here in Microsoft drop, Nvidia, right? The top is our daily expected range of movement on Nvidia. It's up like $5 trillion company, 4.7% up. Yes, it exactly did what it was supposed to do, what it was priced in to do today. No, not even one single penny more than that. So yeah, this is the short today. The short I took here in the Nasdaq on the live stream, shorted our Tuesday high to. Exact short trade was there in the QQQ. Whether you use stocks or option, I don't care, but exact same time short was executed in the QQQ. So yeah guys, we are moving much faster in our group now with the new paradigm, and especially if we go for the wealth. Yeah, you could be very lagging guys, if you are in the members masters group. So try to upgrade to the next level. And join Discord with your YouTube member ID guys, so that you always get latest greatest update and the result mainly, right? The levels are always going to be shared via YouTube post tab, but the discussion, the extensive discussion, questions, chart, plan, execution, callouts will all happen through Discord. No, it's only for new paradigm, because in that we do extensive preparation and the strategy is not complete, to be honest guys. Masters, if you are up till masters, the strategy is not complete. I cannot own any liabilities or anything which goes wrong in daily, weekly masters. New paradigm, yes, I'm fully responsible because I have this many tools and this many level of, we do a lot of planning. Today's planning is already done, where we want to go long, where we want to go short, exactly what level we want to play. There's extensive planning. I spend like 1.5 hours in the morning with them. So we have done all the due diligence, right? And after that, I feel comfortable giving a plan. With members, masters, I'm sharing my levels and I give high level plan, like what we are looking at in the market today. And that's what I'm saying, right? You got to upgrade to the next level if you want to get full-fledged strategy. It was always supposed to be this, not that I just came up and I want more money from people. The 3-year journey always started with that in the mind, that we'll have weekly, we'll have daily, we will have masters, and we'll have new paradigm, and that completes the stack. There's no more new technical group happening with and strategy is complete now. There's no need for me to do anything more in the market now. With the money, yes, with the money scaling part, growing money by different ways, swing trading, stocks, options, investing, hedging, all those could be part of the wealth discussion, but technicalities end here. Yes, because that is the group which is the highest paid group. That is the group I spend a lot of time with. I spend like good 1.5 hours in the morning with them. I prepared them, so yeah, that's why all the extensive planning, call out, it is needed. Someone asked, right? I think someone asked the question in the morning, what do you consider, what do you think about the edge in the market? There is no edge in the market. There is only preparation in the market, and that group, new paradigm, is extensively prepared well in advance. They have extensive tools at their disposal to make the decision themselves and get second opinion from me and execute the trade. So yeah, the edge is only there if you are prepared. No matter how good trader you are, if you are not prepared, you don't have a plan, you go without a plan in the market, you'll find out how quickly, as soon as you put the trade, it immediately goes against you. No matter you are short, no matter you are long, as soon as you put the trade, the candle goes against you and you are stuck, and then you start hoping. That's where the spiral start. Oh my god, will I get a break even? Oh my god, should I have it on? Oh my god, is it going to come? What do you think, it is going to come up or not? It is going to go down or not? Yeah, because no planning, no preparation, no marking of level, no idea why we are doing this, why it will continue to go up, why it will continue to go down, why it may turn around. How are you going to find the edge in the market? To get the edge in the market, it's like you are coming to the a gambling table, right? You got to bring something, right? Either you got to bring a big chip stack where you intimidate your opponent with bets, like you are betting very big, they cannot keep up with your bets, they keep folding or they get scared that you will outbet them. Or you come with a small stack but with a very powerful skill set, very good reading of the opponent, very good calculation of the probabilities based on the cards you have on your in your hand, based on the betting the person across the table is doing, based on the open cards on the flop. You can do some probability calculation well, and you can still beat the big stack owner with the small stack, right, with the skills. So you got to bring something to the table, right? So that's where the edge is, right? It's a simple thing, right? In the trading also, either you got very good skill, very good analysis, very good execution, or you got, small size trading, extreme patience, extreme good hold on the trades. Something has to be there to give you the edge in the market. Russell marching higher. Dow also in the mix. ES, Nasdaq on the back foot little bit. Yes, mindful trader. You guys have expressed wish, right? You want to trade stocks. Spy trader has been asking. I have been trying for 2-3 weeks to get my level stabilized for stocks and options trading. Yes, you are getting experts level and experts level 4 masters level and 5 new paradigm level for SPY, QQQ and all the stocks also. So yeah, this week we are starting midweek. So but look here, you have your Nvidia today. That is your experts level daily high. That is what it moved. 5 trillion market cap going into the daily high, tagging it and coming right back down. We took trade this morning in Nasdaq. Exact same trade was taken in the QQQ as well. So we had a Nasdaq short here in the morning, first trade of the day. Experts level, same experts level in QQQ. There was a short, was an option scalp as well. That's a lot I know. Even 1 AM is not going to be enough. Yeah, I mean, I was showing, right, how many levels I had to calculate last night. If you just put it in the perspective, yesterday evening, I had to, this is my update 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Yeah, 16 updates, and it has like multiple levels within those each boxes. It's getting crazier, I know, for me. But it's okay. I am the man of my words. If I promise something, this is what I promise in my kickoff meeting, right? Kickoff call, we said, I'm going to deliver on all those things. I am delivering on all those things. We still need to make hit this options trading. I think we really got our, things right here with the stocks and option today. Seeing those reaction in QQQ and SPY. And guys, why it won't work? Tell me why it won't work. Okay, you have tested it, masters, you have tested this, right? And new paradigms, you have tested Nasdaq, you have tested ES. I'm telling you, SPY is the same. Why won't it work for SPY and why won't it work for Q? It is going to work. The chart is going to be equally complex. The only thing is in Nasdaq, yes, you get 23 hours. Only 1 hour the market is closed. In stocks, you only have 6-7 hours, right? US session. Most of the time market are closed or in the after hour little bit of movement. So majority of the movement you need to capture during US session only. Well done. You will win. So yeah, guys, masters, we have really taken it couple of notches higher in the new paradigm group. You can see from the feedback you always see in the chat, much stronger, much deeper analysis, more levels. If you are happy with 4 masters level, how happy will you be with 9 intraday levels, right, which are more stronger than the masters? Yeah, maybe join for a month and see. Now that everything is coming along well, especially thanks to that first set of people who trusted me, that even in the first month I'll be able to do it. I did deliver in the month 1 itself, because this long is part of our call out as well. We already booked some profit, you will see right in the chat. We already got that bottom. That is our new paradigm level, guys. So here I might take small profit. Obviously with the E-minis I have to keep it tight, but this already bounced from our new paradigm level. That was our NPL level. More. NPL euphoric. Yes. So good thing is I did not rush, guys. I told you, right? I took good long time. It was ready in the May. I could have launched it in the May itself, but I still waited 6 more months to make sure that it is absolutely going to work to the penny. Like this one, it has to work to the penny like that, right? It has to give you a trade. It has to give you a confirmed reaction. Else, even with this perfection, it is taking me 1 a.m. in the midnight. If it was not working day 1, means I would have not slept at all. No, not here. On the live stream, I trade E-minis. I try to keep it tight here. But we do hold big winners, especially with couple of micros. But Ishan, I think you're too much, I am, to be honest, I have answered many questions for you. And generally I have seen, right, people who are like too worried, too like micro thinking, micromanaging, don't join, guys. Please don't join, because this is like a dynamic marketplace we trade. Nobody knows, right? Nobody has a crystal ball to tell whether the market will go or it is going to work or not. I mean, we just, people rely on good levels, good analysis. Hopefully it works. Most of the time it works. But if you have a very high expectation to the penny that this is like, bang, 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 don't join, guys. I don't want anyone to be disappointed. I don't want anyone to come with a very high expectation that you are joining a club or a group where nothing can go wrong and you'll be a millionaire. So don't join, guys. If you come with the expectation, yeah, it is solid, good, nice, works most of the time. It will help me with my overall knowledge in the market, analysis, trading, practicing, few failures, execution, learning from the failures, asking questions. I'll grow. Then yes, you will grow. So I think I'm done answering your question. Since yesterday, even in the chat, I have answered like 15 questions for you. And generally I have seen, right, people who are having so much of anxiety questions, they feel disappointed in my group, because they have really high expectation. I don't know, they think like I have magic or something. We just try, guys, I know you're just inquiring before joining. I only recently come. Yeah, I know, but I think I have answered enough queries for you since yesterday or day before. So try. That's why I recommend, right? $6, you're not going to get scammed. Right? Just join the members group, right? Stay there for $7. For $7, you'll get weekly levels for 4 weeks. You'll hear me in the morning 15 minutes for 22 days. Nobody can scam you for $7. You're going to get 4 weeks of level. You're going to get 15 minutes times 22 days in a month of trading. You'll get sufficient exposure. You'll see what is going on. If you like it, go to the masters. I never recommend anyone to go to the new paradigm, but I do recommend masters. If you have been masters, if you have seen in action, you have traded, you have used the levels, experts, masters and members, you have used them all as a masters, and you have made money, you are profitable, you are taking payouts, you should not have any doubt, hesitation in joining new paradigm. Why? What did we promise and did not do in masters, experts, members group? Why I will fail in new paradigm? Unless I'm a different person now. You changed. People do that, right? Lovebirds. You were a very different person before marriage. Now you changed. I don't even know you are the same person anymore. What are those famous dialogues? There you go. Blaze, he mentions this in the chat. The levels are the edge. You will still need to practice good risk management and try to maximize your winners, right? See, how you behaved when the market came into that level where you like super greedy that this is it, this trade is going to pass my evaluation, this is the biggest payout I will receive in my trading journey. I mean, if you have this unrealistic expectation, you go crazy, you don't have any risk management plan, you panic, you are not able to hold, you doubt yourself, you doubt your punch you did for long or short. Still, no levels, no indicator, no strategy and no call out is going to help you. But in general, you are also having your own analysis. You think as a second opinion. You think like, yeah, maybe I'll skip this one. He's good most of the time, but I also need to agree with this guy, right? It is in general, right? In general, like people, I told you, right? My strats, people don't leave me because, yeah, you are going to fail. You are going to lose trade anyways. You might want to stick around and use the strategy which most of the time is not disappointing. It works most of the time. But yeah, if you are coming with very high expectation, like this is going to turn around your trading journey, from tomorrow onwards, you can start passing evaluation, you'll start making payouts. I think you'll feel disappointed because it is not me, it will be you who still will not use the same trade, same level like I do. So you can see that there are some comments already in the chat. Different for me. NPL changed my game over masters. If nothing else, join here to just listen to RDGD's humor and jokes. We're just trying, guys. You're trying, and it is good. If I was not good, I would not have survived for these 3 years on the live stream and on the YouTube. I left my 9 to 5 job. Yeah, must be doing right things so far to still not have to go back to that 9 to 5 job. I am patient. I also want to become very rich, very, very rich. Why there is a need for me to be awake until 1 a.m. in the night? Why there is need for me to work this hard or keep working on the strategy? Are you going to eat your strategy? Yeah, it's done. The strategy is done now. Enough. I'm done with my strategy. I am just now focusing on making money. So generally, if you're new, again, all these jokes and discussion aside, if you're new, I would say hang around, maybe become member or don't even become member. See, watch, learn. And I'm not selling any course, guys. All I am doing is giving you access to my preparations. Even if you don't, join, I would do those preparations anyways for myself. It's just that if I were to choose my preparation, I will skip crude oil, I will skip masters level for Dow, Russell, gold also. I would just keep my experts masters level for Nasdaq, ES, SPY, QQQ. That's it. Not even stocks. I would not go into the, because I don't like tactically trading stocks. I can swing trade comfortably. So if I were to go very lean, that is what I would do. Instead of doing this many 6 charts on futures, 8 charts on tech, 4 charts on sectors, I would just stick to 1 or 2 chart, Nasdaq, ES, SPY, QQQ. That's it, be done. On the experts and the daily levels, yes, I have shared my formula how I calculate the levels on the weekly, and which is our members level and our experts level. Masters and new paradigm, no, that is my proprietary. I'm not sharing that. I just share my numbers, levels, the outcome. Bitcoin levels, yeah, I mean, prop firms allow Bitcoin. I'm sure it will not work because there's the reason all these levels, Nasdaq, ES, SPY, QQQ and all they work is because there's good volume conducted in the options market for them. I don't know if there is any optionable product for Bitcoin and how good the volume is on that product. Is there a ETF or something which has options on Bitcoin? Can you tell me? Can you put it in the chat here? Ishan, Masters. Yeah, that's a good choice. So yeah, Masters group, follow all the educational videos. IBIT. GBTC, okay. Yeah, look at that, guys. What levels I should calculate there? Look at the volume here, like 280 contracts, like 57 put volume and 200 call volume. Like what? Like this is, you expect the levels to hold 87.90. That's why that's why I don't, people ask for many such things. If there is no volume, what's the point, right? It can be easily manipulated. If there is a huge volume, like I showed you, right, in Nvidia today there were 2 million, almost 2 million calls and 400k or 500k puts. So 2.5 million almost total contracts traded, and times 100, right? That is just the one call. So one call is equal to 100 shares. Multiply by 2.5 million by 100. So the volume is what makes the level hold and react and give some edge in the market. If you don't have volume in your product, uh, you know it's not going to work out, guys. The levels will not work like that magically. Nvidia is coming down. Why is market bluffing? So market is chopping around, bit flip flopping from strength to weakness. But overall, I think in this situation, gap fill can happen at least for the years. It's just 9 points away from the gap fill. Nasdaq needs 60 points. One of this market may go for the gap fill.
Honda says production cuts are due to a chip shortage in North American plants.
I think this slow movement and this chop is kind of creating bit difficulty here. They were coming down with good momentum and now it paused. Bit scary because they can use our level to go back up also. I hate this kind of situation where it continuously makes you flip flop between long versus short. If it makes me flip to long, I am going to hate that. I don't know, Dow already pumping, guys. So there's a lot of rotation they are doing. Dow already catching a bid here. Yeah, it has slowed down with FOMC coming or approaching closer. Things will slow down, especially between 1 to 2 p.m. Yeah, in this scenario, as I mentioned, right, I'm, gap fill can happen, but the volume is drying out. That's the concern here. Volume drying out. You need good momentum volume to get the flush done. If we get a red candle, one big flush, it can get the gap fill done, at least for the ES. It is breaking toward the upside. Yeah, it was, if you timed well with the NPL level, both the long and the short would have worked for you. If you waited for the confirmation, tried to go with the momentum, the short felt trapped. Now the longs can get again trapped. And all we could get is the consolidation and the retag of the NPL level. Especially now ES has a resistance to clear. Yeah, a little bit of tricky, but at the end, guys, the level again worked. A little bit of see again the confusion is ES. ES always disappoints. ES just had like 9 or 8 point. ES came this close for filling the daily gap, and we had our level. There was a fluctuation around our level. Little bit of bluff, regain that level, and back in the long now. In the slow conditions, it is possible, guys, this kind of confusion to arise. You can see, right? Again, I don't have a crystal ball, but most of the time, Ishan, here it is an example, most of the time the levels do work. What do you expect? Like, a nail to be put into the foot of the market, it is going to come here, it is going to do something, right? It is going to fluctuate. That fluctuation is where the doubt arises. The doubt arises because ES fucking coming into the gap fill, right? ES coming into the daily gap fill, very normal for the market to do the gap fill. Always can never rely on ES, right? It always disappoints you. So yeah, slight bit of confusion. Yeah, maybe we will lose this level, and ES could go for the gap fill, and Nasdaq gap fill is 60 points away. Again, here we are here at the ES resistance, right? So taking some profit. It is a very mental and tough game, guys. And as I mentioned, right, with those level, how you play that mental game, not everyone will, like not all the time. This kind of trick happens, like when the slow conditions, when there is not enough volume, when the algos are bluffing. But most of the time in the morning, when the volume is good, when the things are flowing fluently, there won't be much confusion. But during the trickier time, you will have to show some skills, right, of survival, spotting the bluff. Timing needs to be right. It will work 7 out of 10 time, or take small losses. Yeah, like I was ready to cut the loss. I flipped from long first, which was the original decision, right decision. But I told you, right? I told you my thesis. I told you what I was seeing in the ES. ES came this close to filling the gap, and now it went back just like that. Nasdaq was next in line. Nasdaq had a lot of room for the downside. That's why I had to be very careful. But at the end, the level worked. I mean, as I mentioned, this is our new paradigm level, masters. You see, right, what difference it is making, the new paradigm versus masters level. This is the kind of difference it is making. Original trust, original call out here was still the long. We are still going for that double bottom hold. Where it is here, 2622, double bottom here on new paradigm level. 2622, if you go and check now, 2622 held, the double bottom is working. Here, first bottom, second bottom at NPL level, and you have beautiful trade now. And if you are lucky, this can rally all the way back up also. So guys, this is the difference. If someone then comes and gets frustrated, the level did not work for me. Yeah, level is not going to work for me also. If I don't maintain my composure, don't participate in this slow kind of a condition, don't participate. Now see how beautiful the trade looks, right? Yes, rejecting its exports level. Fucking insane. Like Nasdaq is insane when it comes to fluctuations. ES still has resistance to clear, guys. If ES clears its resistance, then yeah, we have a very good trade. I hate it when we have dependency on ES to get something done. It disappointed on the downside to do the gap fill. Will it disappoint in breaking the experts level we got here? Monday high 4, Tuesday high 1, I think. It's trying to make a push for it right now. then I cut the loss, but then price flip. Hopefully, it will work next time. Logic, yeah. I mean, I also flip flop. You saw me, right? I went from long to short briefly, and then quickly flipped back to long. I mean, the situation again, as I mentioned, right, was brought to you by ES. ES was going for its gap fill. Always disappointing. ES. Whenever we want ES to get something done, always disappoints you. Can never rely on ES for something to get done. So yeah, it require. See again, guys, this is the great example where I still manage myself well. I was ready, prepared to take that bet. If it is going down, I was ready to go down with the market, but it quickly showed the sign. No, it is just a small break, retest, regain the like grab the liquidity of whatever small stop losses below our NPL line. It was not even stop loss hunt, guys. It is just a trickle, guys. It's not even like we lost that level heavily. Like it's just hold and now it is back. But again, ES got to clear this zone, right? ES doesn't clear, this still comes down. So if you are participating in the lower volume tight range, you will have to deal with this kind of tricks which gets played out in the market. Come on, one more green candle. Come on, Nasdaq. Go for that 260. It won't go without eating stop losses. That's the crazy part about Nasdaq. So again, very slow conditions, right? As we approach near to FOMC, things will slow down significantly. And you can see, right, we have resistance. We are not able to clear on ES. If we break above resistance, Nasdaq could start pumping much, I don't know, at least go back to wherever it was before this, pullback. Coming back for stop losses. Should I give more wiggle room? And yes, can ES clear its resistance? Should we wait for ES? The other risk is, Nvidia, as I mentioned, right, achieved everything on the upside. It has also backed off with this pullback. If Nvidia goes for the gap fill, it will be very difficult to get a reversal back up. Just one more push up. Nasdaq, go for it. More than Nasdaq, it's ES. The onus is on ES to break its experts level. Nasdaq is ready. Nasdaq is ready to pump. Russell may go to touch new paradigm level. Yeah, I don't know. Russell would have been a better trade, guys. It has a nice momentum going on. Instead of taking this new paradigm level trade on the Nasdaq, we should have gone the masters level trade on the Russell. That would have worked more, relaxed and more drama free. ES is just consolidating, so I'm not sure, guys, on this one. Yes, waiting for ES, is it a good idea? What if Nvidia goes for the gap fill? Nvidia could go for the gap fill. It was nice when the markets were pumping, right? The moment market stops pumping, all this kind of decision point, drama point, will start. Just remember, FOMC day logic is not real logic. Yeah, that's true. Anything can happen on that day. It's mostly algos driving, crazy moves, beating stop losses, not giving anything. Whatever move happens post FOMC after the press conference is completed could completely get reversed. That is also not normal thing. We have seen it happen. Yeah, ES still struggling, guys. ES is still struggling. Can somebody help ES? A very slow market, guys. If you have to wait this suspensefully for each and small single, tick, not good. With micros, I will be able to hold more patiently. Even will try to wait for the break of the VWAP. But for the E-minis, I'll try to take my profit here. Because if it is moving, it is good. But if it is slowing down, oh my god, it's going to be tough. With micros, I'm still long. Graham, you can make a suggestion, but I am generally not good in taking suggestions and ideas. Especially if it is on trading, don't comment, please. See, because it is very different, guys. It is very different to say something, and if you are on the live, because the unknowns are so many, like everyone's emotion, everyone's point of view, thinking is different. First of all, yeah, levels are killing it. Yeah, so go ahead and give a suggestion. I'll try my best not to take it very negatively. But I gave the complete explanation, right? Even if we consider 3 callouts here, 2 are still successful, right? So this bluff, and again ES coming here, missing the gap fill. I mean, this fucking ES is always a disappointment. You rely on ES for getting something done, you always feel disappointed. Here's the break of the view up. So nothing wrong, guys, with the level, nothing wrong with the analysis. Our original analysis was double bottom, we go long. It just created a bluff situation by ES coming, and also the Nvidia. Actually, Nvidia also came, crashing, and could have gone for the NPL and the gap fill. It had 2% remaining, so you could not take it. You have to take it seriously. What if Nvidia drops another 2.6%? This Nasdaq could have come crashing all the way into its own gap fill also. Yeah, guys, yeah, go ahead, Graham. Give your suggestion what you want, but I mean, I'm already going above and beyond, doing everything possible. So not sure, like, what room for improvement do you see? But go ahead. So micros I'm still long, right? That's what in the call out group I give you micros trade, right? This is E-minis on the live stream. I have to keep E-minis on the live stream, guys. I cannot trade micros and do, uh, so in the call out group, right? The original trade and even the second long, right? The first long was using micros, 4 micros. I'm still long. This is my current position using micros. I'm still long. I told you, right? I'm going to take the break of the VWAP. I'm trying to hold towards the top end of the range. It is E-minis works better, guys, for me, because I have to get in green. I have to trade multiple account with micros, whatever. Like I cannot trade. I cannot trade tactically with the micros. I can buy, hold and forget entire day if I have micro. With E-minis, it gives me good scalping trading opportunities. And in the live stream, people want output. People want result. I commit any crime today, as long as I'm in green, nobody cares. The moment I will have red, even the small miss, will get criticized. I feel like it may benefit you. No, thanks. It is go back history of 15 days. I have already benefited myself. Why that suggestion, right? Go and check the live stream performance. This is the live stream performance. Why am I not making money? Why do you feel that I should trade micro there on the live stream? Am I not making money? It's profitable. I will not make this kind of money with micros, and I don't want to look stupid like trading 30-40 micros. I can just trade 2 E-minis, right, to make that profit. It is already profitable. Yeah, it is stressful, but it is okay. I'm ready to take that stress. I'm concentrating on the live stream. I have the thing is, you have to carefully manage the position, and I'm able to do that on the live stream. Yeah, you can just go and check back the history, right? With micros, I'll never make this kind of profit. Micros are good for good couple of $100, but yeah, there could be some days, losing days. It's okay. I'll take it on the chin. 3, 4, 4, 5 losing account, but whole day I'm not going to lose. I know. There's always a chance to the bounce back, right? The bounce back is much stronger. I want to put some strong show, guys. Just losing and averaging down. I don't want to do that kind of a live streaming. Yeah, this is already, you keep going back in the history. Yeah, there will be losing day here and there, but this works best for me. So yeah, guys, it's nothing is going to change on the live stream. Sorry. See, then I'll have to you see like $100 profit and then entire day of yapping. It doesn't work like that. People want to CPNL. Yeah, I will throw 1 or 2 PA accounts and couple of evaluation in the mix. I'm ready to take some losing or take some hits, and I know the losing days and losing session will be very rare. Maybe 1 in 4 days if you consider average, or 1 in 5 days. But whenever I'm winning, I want to win a lot. Yes, psychology, when you have a bad day, you want to do minis. When you have a great day, you want to do minis. Yeah, I mean, so you lose same, right? People, average down, go crazy when they are losing, right? With the micros. But when they are winning like, what there is a saying, right? You're eating like ant and shitting like elephant. It has to be same, right? It has to be same. Winning and losing has to match, and in fact, winning has to be more and more stronger. But who knows? Until you lose the trade, you don't know if it is going to be a bad day or losing day. Guys, these are all like very personal and very what you say, right? Individual choices. It's good. I think I'm as I mentioned, I could be trading at my best abilities these days. I don't want to again go through. I'm thinking, right, next week I want to participate in that Tradifa tournament, but I don't know, like, if it is starting to mess with my psychology, I'll not trade. Maybe I'll try. If it doesn't feel good for my emotions, for my psychology, who cares? Anyway, I'll never go for the win or something like that. I feel like your members are also now can tell when you fake laugh like your wife. Exactly, I think micro is like training wheels. Nothing wrong, but it's not worth much money. Yeah, micros, guys, the amount of pain you go through, amount of commissions you pay, and $33 profit is what I have made. You want to see like $35? Here it is $350. I can pull up my funded account here. Same trade, right? I still have one micro on, I told you, right? In my funded account in one of the prop firms. I can show you guys. It's not worth it. It's wastage of time. Yeah, look at that funded account. I got going there. One micro still long, $68, but overall profit you can see, right? $35. Yeah, if I close the trade, I'll make $67. For this $35, I appreciate this $350 across this many account. And the thing is, I think the problem is not micros versus e-mini. The thing is ability to take loss or cut the trade, right? I know I have that ability. I can cut the trade anytime. So if someone has that ability, I don't think there's any problem trading e-minis. Problem is people don't take the losing trade. They don't accept that they are wrong. I was ready to flip from the long to short and again accept no, it is just a bluff, going back to the long, and I'm still long and I'm still holding my long. Exactly. Mindful trader, in 50 years from now, I realize that trading was never a game of charts and market. It was always the game of one's own psychology, right? Whatever works for you guys. For me, as I mentioned, right, if I'm prepared, if I know my numbers, you tell me now, guys. Some people who might be doubting, this is all bullshit, right? You don't need this many fucking levels on your chart, and this guy is a scam, whatever. Tell me now what happened, what you witnessed in the market, and if I did not go for this new paradigm again, masters, right? You think like, I can live with those 4 lines, I don't need these 9 lines. Tell me what came to the rescue in my psychology, what got me this winner. Now you tell me. NPL got me this winner. There's no masters there's no experts, there is no member level. I have the confidence that double bottom should work here. We have a bluff created here. We did not to the penny bounce from it. Probably this could be the reason. First time we came, we missed it. So we built some. See, there is always technicals. First time we came here in the pre-market, we missed it. So obviously people who are long here, they have a bunch of stop losses, right? So once it come here, it did give initial reaction. I think you will win, right? One of our member here in the chat, he confirmed. He already got a winner here. He got that first tag of that level. He already picked up a winner here. Obviously on the live stream, I am going to do more due diligence. I am going to make sure that it is holding. It was holding, and then I don't know, participate here when it was holding. It then flipped lower. We lost that level. Break retest is rejecting. I am going short. Again seeing that it's a bluff. Turning around and going long now. So tell me guys now, why this preparation is not, why should not I stay awake until 12:30 or 1 a.m. in the night? This level got me a winner here. This level saved my day. I need to have that level, new paradigm level. I will not take this kind of bluff anywhere here or here. Did I participate in the market anywhere since morning? I did not. One trade I took was short over here. Tell me now, go and map my trades for today. The one trade I have taken today short in the morning was this one at my level. Next level waiting here, new paradigm level 26,222.50. The next level you have seen me play out here at 26,220. There was a bluff situation. There was a liquidity for the previous miss of that level, some stop losses to run. There was fucking ES, always a disappointment, never gets its job done. It had a gap fill to do, just 9 points shy, did not fill the gap. So guys, you can see, right? No, not open for any suggestion, not open for any feedback. you don't join my group, you don't join my membership, I'm fine. I will still do those calculation anyways for myself. So guys, it is very difficult, I am telling you, right? If you are profitable, if you are getting winners, don't listen to anyone. Something works for someone may not work at all for you guys. And I told you, right, this is the reason I didn't create a new paradigm just to make more money or gimmickies or anything. There is a practical implication, there is a practical reason, there are practically different trade, and there is a practically different, you can see, right, style and confidence coming because of NPL level. There's nothing there. It's NPL which is holding, and NPL giving you the trade. So guys, I think the first mistake is we participated in this slow price action, right? It's very slow because of the FOMC. Things are slowing down now, and this Nvidia is a big risk now. What if Nvidia just simply rotates into its weekly expected move upper edge, right? It's in the 2 deviation mode right now. This week Nvidia is at the 2 deviation move. If you go and check on Nvidia, it's a 2 deviation move, right? Already, in fact, we are 1x, 2x and above it. In fact, this pullback, I don't even have this level, else I would not have got bluffed. I have this level. Look here, see, these are the small misses. I have this level here. I should have got this level on my new paradigm chart, right? There's no level there. You tell me now, right? Would I felt glove. I just added this level now. I got scared, right? Why did I turn around and short? For a moment I thought like, we are going for the gap fill, and that's what I called out in the chat here with my group. Nvidia may go for the gap fill. Look at here, there is no level here, and I think like Nvidia is going for the new paradigm level and the gap fill. Now I put the level, the missing link. Yes, there is a level in between. We are not going anywhere. We are holding that 2x line. See guys, it's the knowledge, nothing else. There is no transaction between you and me. There is nothing else. There's just levels, okay? The only transaction we have, or only communication channel we have, is levels, okay? And we are both sure, right? You hold the, right? As a kid, you play that game, right? You attach a string and tie two, hollow boxes, and you speak, right? It is very fun and very surprising that actually you hear the voice of your friend through the string. So the levels are nothing but the string, guys. You don't see me, you don't know my name, my face. I don't personally know you. The only communication is the string or this level. I missed this level to mark on my chart. We calculated together, remember, on the market. I just got scared. I felt for a moment that Nvidia, my God, it's coming. The way it was coming down, it's coming for the gap fill. Just to now realize there is a level, 2x level there. I should have had it on my chart. Should not have bluffed me from going long to short to long again. And here we are. It's levels, guys. Nothing else. There's no other transaction. I keep talking about. Sometimes, when we do have some disagreements, sometimes as a viewer you can disagree with something, as a member you can disagree, but at the end it is all levels, guys. There's no other string between two hollow boxes here. We speak through levels. Levels hold, levels do magic. We take trade, the trades work. If there's no level, there's no potential behind those level of, and these are not just ordinary level, right? These are not just ordinary level. These are market makers putting their bets. You lose the bet, the hedging starts. You lose the bet, it spirals into the 2x. It doesn't stop, it spirals into the 3x. If there is something in between, what is that something? What prevented this spiraling effect? There's the daily high on the Nvidia. That's what prevented. If I go and now map this daily high here on that chart, look here. Everything is explainable in the market, and you are like somebody doubting the level does not work. Tell me here whether the top here or whether this survival on that pullback and the rotation back, isn't it because of the level which we knew it beforehand? These numbers, I know it yesterday evening. This line I know it since Sunday, because it is just the 2x of this move. This is just the hedging activities. The top is because that is the daily high, that is the daily swing high on Nvidia. The prevention of this sell off is because this is the 2x move which is still there. After the FOMC, yes, we can sell off from 2x back into the 1x, but are we ready to lose this level without a catalyst? Turns out no. Anything on gold? So anyway, guys, hit the like button. And again, guys, as I mentioned, right, this may not be for everyone. There are this is a very thorough, very detailed and very deep group. If you want little bit light trading, fun, cars in the background, shouting, cursing, there are many options out there for you. If you like this intensity, you like this deep level of discussions, knowledge, welcome to stay along. Gold hit our daily high. This was the daily expected range of movement on the gold. That's why we are not going further. This is what market had priced in. It stopped here yesterday evening. It was priced in to move this much. It moved one deviation move, exactly planned move, and now rotating back down, losing levels after level, coming back to the midpoint and fill the gap. So yeah, gold looking to fill the gap, trying to get neutral. Don't go long as of now. It is losing our levels. You can see, right? Lost the level, looking weak, coming back into the weekly expected move lower edge. On the bigger picture, this is too confusing. Look at here, bigger picture. All we are doing is rotating back and forth around the weekly expected move lower edge. This is our week. We hit the lower edge. We had little bit of pause. We broke below it. We came back to it. We went above it. We are coming back to it, holding, and probably a 2 deviation move after the FOMC if we lost that level. Everything in the market is explainable well in advance. It's not our contracts, it's not retail, at least in the indexes. It's mostly algos, hedging activities, and hedging activities are derived from all these numbers and levels. They go from the weekly into daily into intraday levels. So Russell coming back into support. We have some numbers there in Russell. But guys, between 1 to PM, why do you want to trade? You should be already long and holding your long in Nasdaq or ES. Russell coming back into the support. We have some levels here, but between 1 to 2 PM, don't trade, guys. The order books are going to dry. Yeah, Russell may hold this area. It may stay around this area, especially if Nasdaq continues to move up. But don't, Russell looking dangerous right now. Stay long in the Nasdaq. I'm still long with 1 micro at least. I showed you, right? I'm still long. I'm still long here in 1 micro at least. Look here what I got trading micros, $78. Graham, no, don't worry. But I'm just explaining, right? I'm also giving the logic, right? While I'm answering your question, it is actually a good opportunity to explain to others also, right? How trading works. In fact, I'm right now, as I think yesterday only I mentioned, I'm ready to step it up a little bit more, guys. But it's okay. I want to make sure that my psychology, my emotions, and everything is in under control before I start scaling. And if I that's why I said, right now the new paradigm is launched, right? The only group which is going to come is wealth. The wealth group, as I mentioned, right? I need to demonstrate here live. Show me the money live. Trade here, size. Demonstrate you have psychology, emotion, guts to hold your trade with the bigger size. Obviously, we are not going to go to that path, right? We saw the other day, right? We are never going to go to this path, right? Where is it? We are never going to go 600 contracts like this, right? Short. But obviously, it will be my style, my way. But I want to trade bigger size and I want to have the psychology, emotions, and capability of trading big size in one account. Hopefully, it's coming to theaters near you soon, year end, early next year. First thing first, we have to absolutely stabilize our new paradigm group. I think 70-80% we are stable. Today, again, seeing the output we are getting with the SPY, QQQ, and the stocks. Look at SPY, guys. You want to check out our new paradigm group on SPY? Look at SPY. Look at this yesterday's close, right? Look at yesterday's close. Look at the top here on the SPY. Look at the consolidation which is going on here. Look at the consolidation. You want to check out QQQs? Let's check out QQQs. Look at that. Look at that pop from yesterday's close right into this was the top and the short, and here we are in the middle, right? Confusing, but luckily we have a new paradigm level here in the Nasdaq futures. That's why you need to track everything parallelly. There's something going on in one product or the other, which sometimes we may not be aware. Wealth is where I belong to. Bhai Tera, you are already, you don't play, the big blinds, right? The big blind is going to be $100 million, right? What is that movie? Casino Royale, right? Gentlemen, with this chip exchange, we enter the final phase of our game where the big blind is going to be $100 million. I don't take small bets. I just go for the big ones. 600 lots. So keep micros in the mix. You can still see, right? I still trade micros in some account where I'm not going to manage here. Like this is the only screen where I super micromanage my trade. All other screen, I have stop loss, trade place with the micros, or if I'm trading E-minis with a fixed stop loss and the fixed take profit, a scalp. That's it. The bet was with 1960. 1960. 1960s. What does 1960 mean? Annoying range. $600 is not in one account. I'm hungry. Oh my god, I missed my lunch because of all this trade and explanation. Let me go bring my food, guys. Then we have to get ready for FOMC also. Give me 2 minutes. I'll be back.
surely expecting the result of the Fed reverse repo operation. "15 counterparties take 19.504 billion at the Fed reverse repo operation."
Breaking higher, right? Yeah, finally ES managed to break its resistance. See, everything happens in the sequence. You got a little bit push, right? One more candle at least above, because ES managed to break its resistance. We have been trying to break this, right? Couple of attempts. It looks like a strong break, retest, holds, and then go back up. Anyway guys, I'll be on mute for next few minutes while I finish my lunch. Thank you. Well, I appreciate you watching from Germany, and it's very impressive. Even as a student, you are considering trading and making money as a trader. We even with 18 years of work experience, having traveled a lot, had difficult time managing and emotions, risk, learning from so many failures. It's impressive, like young people who are still studying are doing well. This is your last semester, and now I'm confused if I should go for a full-time job or continue with full-time trading. I mean, trading takes time. Even though you may have winners and you may have done well 6 months, 4 months, or maybe a year went well, I still say have a job. It takes good 3 to 4 years before you become a fully capable and a seasoned trader. If you don't have a job, I mean, if you are young, how old are you? Like, it depends, right? If you don't have, I don't know, like I have 2 kids, I have mortgage, I live in a very expensive city. It has been a very, it has been a big pressure for me all the time. I left my job when I was not very profitable. I was like making money, but at least it was not replacing my 18 years of work experience as an architect salary. But yeah, I have background of doing some crazy things in the past, especially with something which I have no knowledge about. I end up doing it really well because that's what I did as an architect. Go do projects which I don't even know what technology it is going to be, what the client is going to be, what industry it is going to be, and I always delivered for 18 years. So stock market was just going to be a project for me, and I had savings, right? 18 years of work, but yeah, pressure of family, 2 kids, mortgage, bells and whistles, car loans, this and that. It's a pressure game. Yeah, if you don't have many 2 years down, haven't borrowed a penny from home, so yeah, good. You're 26, you're young. Yeah, you can make mistakes also. It's okay. Even if you fail or something, you always can rebuild a new career at 26. At 42, 40 years, I left my job at 40. I had made, as I mentioned, right, good money in my first 18 years of work life. I made a promise I will leave my 9 to 5 job before 40. So I left my 9 to 5 job before I turned 40. Now I'm 42 years. So it was tough, but I managed it well, and I'm now doing really well. Each passing year gets better. That's the key. If you don't give up, you are good. If you have good skills, you are making money, you are making small profit, you are making consistent profit. Each passing year will become better in the market. Every next year is better than the previous year for me. So ES bluffed again, failed at that level. It was a fake break, again back down, consolidating at that line, but came very sharply. The way it went up, it came right back down. Still at the mercy of ES. My parents both are both teacher, and you sound exactly like how my dad explains it to me. How long you practiced before becoming full-time trader? During COVID, right? 2020, 2021. I
Sources
nibbled
say
around
Germany examines option of
micros.
nationalising Rosneft's local business in a backup plan.
I think the CME announcement. CME announced micro ES first, and later after a few months they announced micro Nasdaq, and that was back in 2020, 2021. That is where I found out what is this micros. You can trade futures with that. I was aware of E-mini futures, Nasdaq futures before, but I could never trade ES, E-mini and Nasdaq with my personal money. No way, that kind of a risk. But yeah, once CME introduced micros, I started having fun with micros. Mostly $100-$200 winner, but $500-$600 losers, averaging down. Then I found out about prop firms during 2022. So one full year of prop firm losses, 2022. It would not have been 1 year of full losses. At that time, the rules were impossible to make payout. You had to survive 40 trading days. Today, the industry average is 14 days or less. People lose account in less than 14 days. So we had to survive 40 trading days, which is like kind of 3 months to make a payout. And that's why it took 1 year to get the payout at that time. But in 2023, the rules were relaxed. I killed it, 23, 24. Yeah, a couple of years, 1 or 2 years before actually trading and losing for 1 year. 1.5 year of loss practice, and then profitable with the prop firms. And now every passing year, it's just getting better and better. I joined you at 23, 24, hanging around here during my evenings. Sometimes I did not have funds. but it was always great to watch you trade, and the way it got me a hopeful life. Nice. 3 years I was down $37K during COVID. I put all my block money for education in trading with no knowledge that where I found you. Okay, my goodness. Yeah, don't risk your educational money. Don't risk your emergency fund, guys. There's a disclaimer I put. I can show it to you again, right? What that disclaimer, guys? Risk disclosure. Read that. Futures trading contains substantial risk and it is not for every investor. An investor could potentially lose all or more than their initial investment. Risk capital is the money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performances is not necessarily indicative of future results. Always keep that in mind. You are having fun, you are learning. Learn with the risk money. You can see, right? Anytime market can sell off, anytime can market go in that kind of a mode where there can be extreme volatility in the market. And what is going on? Nvidia going for its gap fill. If you don't use stop losses, if you don't exercise caution, yeah, I better finish my food, guys. Give me like 2 minutes. NPL level, guys. Watch, we are back to the NPL level. Now, don't tell me that ES wants to do the gap fill. ES back to that same square, right? To do the gap fill. Nasdaq back to its new paradigm level. See, guys, yeah, ES going for the gap fill. So in Tradify, does anyone know Tradify funded account? Your news trading is allowed, right? You can trade the interest rate FOMC with Tradify, or in Tradify funded account you cannot trade the news. Yeah, at least a little confirmation that the level is trying to offer some kind of a support, but looks like not a strong reaction so far. Again, this doesn't qualify for our call out. This is a risky trade. Okay, thanks for confirming, guys. So guys, yeah, attempted a trade because we have level, we have new paradigm there, guys. Scalp can happen. If we are lucky, can again send us back above. ES can keep us waiting for its gap fill. But yeah, eventually the bigger goal is ES coming for the gap fill, guys.
And JP Morgan's Michelle, ahead of the FOMC, says we expect the Fed to cut 25 basis points and end quantitative tightening, saying the Fed believes this is a risk management exercise. Don't believe we will see descents to the hawkish side.
Hawkish side? Is market ready to hear any hawkish comments? Market is just prepared for all, What do you mean by gap fill? ES is up 7 point right now, 0.11. When ES is up 0.00%, that is a gap fill. Simple as that. Anything, right? Nasdaq right now, Apple is up 0.49%. If Apple sells off another $1.40, it will be up $0 for today. That will be a gap fill. Exactly same spot where it left off yesterday evening. Nvidia is right now up $5.45. If it sells off another $5, it will be a gap fill. That's the gap fill from Monday during FOMC. Can happen. Can happen. Gap fill. Yeah, I mean, we have achieved most of the upside in the market. In some cases, we have achieved more than twice of what was expected. Like I showed you, right, on Nvidia. Not only once, not only one time, we achieved 2 times of what we were supposed to do. I mean, it can go to the 3 time also, people going crazy with Nvidia anyways. But yeah, with the indexes, you can see that Nasdaq has hit the full potential. ES almost hit the full potential. Dow Jones hit almost the full potential. And yeah, they can start rolling over for Wednesday, Thursday and Friday now. Especially the earnings, right? Out of 5, if even 2 is going to miss, not even 3 guys, even if 2 people or 2 companies miss their earning, out of 5, Microsoft, Amazon, Apple, Meta, Google all report between tonight and tomorrow evening. This thing is coming down, right back down. Russell is already not participating. Russell, nobody wants to risk Russell, right? With the Fed coming, this product really can move big, guys. So Russell it's going to not disappoint, guys. Russell moves big. It can move really big in one session. So it is capable of pumping here after the FOMC or right into these lows. So watch Russell at the FOMC today. It may not even wait for the earnings. And here we are, guys, masters, check. New paradigm check. Worked again. That's why it took that long. Booked again 20 points with full trust on your NPL. But guys, don't blame me, okay? The day it doesn't work, still exercise your own, because no matter, guys, how good the levels or how good any strategy is, it will still have losers. You just saw, right? In the morning, I still exercised my precaution, right? Still, if the level was going to lose, I was okay to cut my loss, maybe turn around and go short or turn around and go long if it was going to work. But why not, guys? Why will not level work? 2 real trading opportunities so far, 3. I have taken all of them. 3 trading opportunity with my level. You can see that this day, it's a crime, guys. If you're trading, if I am trading without my levels, what's the point in, doing this much of effort if I trade without my strategy now? It is not happening. Not even a single trade without my level. Masters, we are asking you questions. Where is Masters level here? It's NPL running the show today. There was a need, guys. There was definitely a need in our Masters. As I mentioned, right? 1 month is not enough. Market, we need to do deeper analysis, and that's why we got NPL. I don't trust further long. Yeah, I mean, it's all FOMC now. Only 15 minutes to go. This looks, to be honest, a very good bounce so far. Especially Broadcom with that move. Look at Broadcom with that flush. Came right into the weekly expected move upper edge, and now look at the bounce from here on Broadcom. Maybe I can show it to you here on this chart. Somebody asked Russell, right? Look at Russell. Yeah, here's your Broadcom straight into the upper edge and bouncing off it. Russell, somebody had asked me, right? Look at that. New paradigm level on Russell, guys. Masters, look at it. Look at this. We just spoke about Russell, right? New paradigm level there, bounce straight into the experts level. And look at this bounce, guys. This is going nuts, guys. I'm still long in that account, right? One micro. I can see, right? I can do it. Still long with one micro. Up $59. No harm cost, right? With that fluctuation, no harm cost. Still long in that one trade. So if I do that kind of a trading, people are going to, say this is not trading. I had one micro, I left it. It went down and it came back up. I'm still in green. Why you want raise your blood pressure with every red candle and green candle? Hit the like button, guys, if you are enjoying the show. Again, focus is always on trading here. I don't want to waste
G7 to announce Critical Minerals Production Alliance on Friday.
anyone's time by speaking anything else other than trading in my live shows. So hope you are appreciating this content. That there are many distractions, guys. People do crazy things to engage audience. All we do here is stock levels, market analysis. That's it. There's no other things going on here. And now with this new paradigm, as I mentioned, right, the trading is going to be, it is going to be very good to watch. This is like a good sight to be seeing, right? This kind of perfectionism, this kind of accuracy which is possible in the market, even though you may not be part of it, you don't want to join, it's fine, but you should at least be able to appreciate the beauty. I took that trade, guys. I took that trade. With the E-minis, I took small profit. With micros, I'm still long. I trust my levels.
So in 15 minutes time now, at the top of the hour, we see the release of the US interest rate decision as well as the rate statement. For the rate decision, general consensus is for a 25 basis point cut down to 4%. Ahead of the FOMC meeting this month then, a note from ING who say that the US September inflation was softer than expected, rising spot 3% on the month and 3% on the year for headline, and spot 2% and 3% on the month and the year for core relatively. They say the consensus forecast was for a spot 4% month-over-month headline print and a spot 3% month-over-month core. As such, ING see this as a green light for a 25 basis point Fed rate cut at this meeting, even though the core month-on-month rate continues to track above the 0.17% month-over-month rate that we need to average in order to bring the annual rate of inflation back down to 2%.
Look at that, guys. To the penny bounce on Russell. And we said, right, you could be back doing back and forth around that level. We are again back to that zone, right? For the FOMC, we are back to that area. What a bounce, guys. Hit the like button for our NPL level. If not for me, for my level, got to give me the like. People's on the sidelines doubting those numbers level, output results are in front of your eyes. Look at that. Look at that. This is all you want, guys, So I will have to leave at 3:20. So just be aware, I will not be there all the way till the session end.
So in 10 minutes time now, at the top of the hour, we get the US interest rate decision, where the general consensus expects another 25 basis point cut to 4%. With this, we also get the FOMC rate statement. So some commentary from Bank of America ahead of the rate decision today. They say the Fed is expected to cut rates by 25 basis points and end balance sheet runoff at its October meeting. They say policymakers will likely acknowledge the recent economic resilience, but keep their focus on supporting the labour market. With limited official data due to the government shutdown and ongoing uncertainty around the employment trends, Powell is unlikely to give forward guidance beyond this meeting, reinforcing a cautious fly-by-instruments approach.
Apple is pumping, Nvidia caught a bid. Alphabet or Google through the roof, flying high.
So we're now 5 minutes away from the top of the hour, where we get the headline event for today, the US interest rate decision, where the general consensus from the markets and analysts expect a 25 basis point cut to 4%. We also, with this, get the FOMC rate statement. So one last note ahead of the Fed rate decision today then from Credit Agricole. They say the upcoming September FOMC meeting will draw significant attention, particularly due to the lack of key economic data during the ongoing government shutdown. Reports such as PCE, GDP and employment costs will be delayed, leaving only limited releases like consumer confidence and regional Fed surveys. The Fed is expected, though, to deliver another 25 basis point rate cut at this meeting, keeping its guidance open-ended amid uncertainty and internal divergence on the policy outlook. Policymakers are likely to reiterate that rates are not on a preset course and that no risk-free path exists for monetary policy. Analysts argue that market expectations for rate cuts remain too aggressive, as the Fed will likely pause easing once inflation concerns reassert themselves later this year. Attention will turn to the Fed's balance sheet policy, with Fed Chair Powell hinting that quantitative tightening could end in the coming months. While a formal announcement may not come in October, recent money market pressures and increased use of repo facility suggest that quantitative tightening's end is near, possibly by December, after Powell lays the groundwork at the next meeting.
Yeah, we'll stream the press conference.
One minute remaining. I'll lead with the US interest rate decision. Ten seconds.
Nuts. Market is going nuts.
cut, 25 basis points cut, 25 basis point cut to 4% as expected. The Fed says Myron dissented in favor of a half-point cut once again. Says the Fed say they will stop shrinking the balance sheet on December the 1st. So again, Fed saying they will stop shrinking the balance sheet on December the 1st. Fed Schmid also dissented in favor of no rate change. So Fed policy, the Fed here say policy committee is attentive to risks on both sides of the dual mandate and judges downside risks to employment have risen. Inflation has moved up since earlier in the year and remains somewhat elevated. Uncertainty about the economic outlook remains elevated. Fed vote in favor of policy was 10-2, with again Myron preferring a half-point cut and Schmid preferring no cut. To conclude, aggregate balance sheet drawdown on December 1st. So Fed, they're saying beginning December 1st, it will roll over all maturing Treasury principal payments. US short-term interest rate futures fall after the Fed decision as traders pair bets on further Fed rate cuts.
Congratulations, guys. You got your next Fed chair. Confirm. Mr. Myron. Double rate cut. Favoring double rate cut. He is your next Fed chair. We found Powell's replacement.
Treasuries extend drop after the Fed cuts rate with 2 dissents.
So Russell starting to fly, guys. It could be Russell's turn now to go into that weekly expected move upper edge. Russell starting to make a move. But ES unable to clear that area, guys. Experts level has held ES throughout the session today. Straight into new paradigm. You know, right? This big down movement, where did it got us? Right into our new paradigm. ES gap fill, guys. Be careful. Gold tagged and reverse from the lower edge. Yeah, gold. Yeah, we have to keep eye on gold as well.
Voice news disconnected.
Which gold? Yeah, gold. Wow. Yes, gap fill coming up. Don't go long. FOMC. Press conference. Yeah, not much movement as such. We stayed in the range. We still are holding our new paradigm level, yet to lose that level, right? We have been trading since this afternoon now. Same area held 2-3 times. Did the gap fill happen? No. Again, yes, disappointed. It came 6,927 and change. 6,925 and change was the gap fill. For 6 ticks or so did not do the gap fill. That's the problem, guys. In ES, let's say if I was looking for the gap fill trade, I would have been disappointed since 9 a.m. That 1 or 2 ticks, sometimes 4 ticks. No, they have specifically mentioned, right? Do not trade 1 minute before, during, and after the news announcement. In the funded account Pro Plus, you cannot trade the news event. But already it's over, right? The press conference you can trade. The interest rate decision 2 p.m. you cannot trade 1 minute before, during, and after. Yeah, I have taken many payouts from Take Profit Trader. You can withdraw every day above buffer. Is that a crane? Take Profit Trader is good. Only thing you need to be aware is in the funded stage it is live trailing. You have to trade it like Apex, live trailing drawdown in the funded or Pro stage. But once you make $5,000 payout, they move you to Pro Plus. Then it is again
US
end of
10
the
to
day
30
drawdown.
year swap spreads dropped to session lows after the Fed.
It's simple, straightforward. There is no consistency rule. You can make, let's say, for a 50k account, you made $3,000 on day one itself. You got a 50k funded account. You had 2,000 drawdown room. You had 2,000 drawdown room. It is end of the day during the evaluation. For 2,000 drawdown room, you made 3,000 profit. You pass the test. You get the funded account. There is a $0 activation fees right now. So once you get funded account, day one, let's say again 2000 live trailing now. That is the only difference. Now in the funded stage, you have live trailing 2000 to make 3000 profit. Not even 3000, you make 2500, you make 2300, let's say on day one. You have to leave $2,000 buffer. Next morning, you can request $300 payout. Always 2000 should remain in the bank or in your account. They withdraw the money, give it. There's a wallet system. They deposit the money in your wallet. You want the money cash, you request the withdrawal from your wallet through PayPal or ACH transfer, or I think they have Wise. Money get deposited in your PayPal, Wise, or direct bank account through wire transfer. If you don't want to use that money as a cash, you can keep it in the wallet. Use that money, let's say $300 you withdraw, use that money to purchase more evaluation. You can use that wallet money to purchase more credit or the accounts. You can reset any failed account with that money, so it stays in that bank and that wallet with them. He always comes with a purple tie. Very rarely he is coming with the blue tie these days. It looks like it's going to be more bullish. They are even going to talk about stopping the contraction of the balance sheet, pump more liquidity in the market. Fed wants to distribute more money, expand its balance sheet, maybe buy stocks. They did that during COVID. Fed actually bought the stocks, equities. They might put money right into the market. Direct injection of cash. We buy indexes for you. Yeah guys, more bullishness apart from the rate cut. That's why we are not seeing any fluctuation, not even a gap fill on ES. So it's coming back again down for the gap fill. Let's see if it can do this time. But yeah, don't be surprised guys, if market again goes crazy upside. Everyone is looking for it to go down, which means it might still continue to go up. They will say that balance sheet contraction, more liquidity, lower rate, it's all favorable for the markets. Even if the economy could be in the distress, by the time GDP prints negative or flat growth, or we go in the recession, markets will again make new all-time high. It will be already it will forecast out of recession scenarios. The system needs debt, more debt required. Yeah, that's what they will acknowledge, right? They will say we'll have to stop contracting balance sheet. We cannot deprive this economy which requires debt. more money all the time. Everything is in the stock market. Everyone's wealth is getting concentrated in the stock market. Nvidia $5 trillion, Apple $4 trillion, Microsoft $4 trillion. All the money concentrated in the stocks, all the money concentrated. Because the dollar is not rising. Let's check on dollar what it is doing right now. Yeah, dollar is dead. No life in dollar here. Dollar is dead. 10-year yields. Let's check on 10-year yields. They have backed off. At least that is weekly. They are not at the highs, 5%. It's still at the lows. Dollar we just saw, right? Where is my dollar? Dollar not at all. Gold we know, right, has backed off as well. Let's check on gold. What is going on with the gold? Let's delete that. Yeah, still at the lower edge. No relief for the gold longs. More downside guys in the gold. It's not bouncing. The cat is not live. It is not doing even a dead cat bounce. The cat is in trouble. Gold cat is in trouble guys. It's not even doing dead cat bounce.
So we're now 10 minutes away from the bottom of the hour, where we get the FOMC press conference with Chair Powell. We have got the live video on the feed for those interested.
Yes, I'm taking 5 minutes break. I'm going to be back in 5 minutes.
In 5 minutes' time now, at the bottom of the hour, we get the FOMC press conference with Chair Powell. We have posted the live video to this on the feed.
Yeah, guys. So still holding our new paradigm for the FOMC, guys. Holding
Shortly
that
expecting the
line.
start of the FOMC press conference.
I don't know how many more times we might about to be losing that line. Use it many times already this morning.
And Powell has started the press conference.
And I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although some important federal government data have been delayed due to the shutdown, the public and private sector data that have remained available suggest that the outlook for employment and inflation has not changed much since our meeting in September. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals and in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a moderate pace. GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year. Data available prior to the shutdown show that growth in economic activity may be on a somewhat firmer trajectory than expected, primarily reflecting stronger consumer spending. Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends. In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Although official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.75% to 4%. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course. At today's meeting, the committee also decided to conclude the reduction of our aggregate securities holdings as of December 1. Our long-stated plan has been to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserve conditions. Signs have clearly emerged that we have reached that standard. In money markets, repo rates have moved up relative to our administered rates, and we have seen more notable pressures on selected dates, along with more use of our standing repo facility. In addition, the effective federal funds rate has begun to move up relative to the rate of interest on reserve balances. These developments are what we expected to see as the size of our balance sheet declined and warrant today's decision to cease runoff. Over the 3.5 years that we've been shrinking our balance sheet, our securities holdings have declined by $2.2 trillion. As a share of nominal GDP, our balance sheet has fallen from 35% to about 21%. In December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady for a time, while reserve balances continue to move gradually lower as other non-reserve liabilities, such as currency, keep growing. We will continue to allow agency securities to run off our balance sheet and will reinvest the proceeds from those securities in Treasury bills, furthering progress toward a portfolio consisting primarily of Treasury securities. This reinvestment strategy will also help move the weighted average maturity of our portfolio closer to that of the outstanding stock of Treasury securities, thus furthering the normalization of the composition of our balance sheet. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting our maximum employment, bringing our inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Nick Timmeros of the Wall Street Journal. Chair Powell, are you uncomfortable with how market pricing has assumed a rate cut is a foregone conclusion at your next meeting?
Well, as I just mentioned, a further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So I would say that needs to be taken on board. We had, just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our two goals, we have strong views across the committee. And as I mentioned, there were strongly differing views today. And the takeaway from that is that we haven't made a decision about December. And we're going to be looking at the data that we have, how that affects the outlook and the balance of risks. And I'll just say that.
You and some of your colleagues have framed last month and maybe today, I won't put words in your mouth, there's a risk management exercise. At what point do you conclude that you've taken out enough insurance? Are you looking for some kind of improvement in the outlook, or could this unfold along the lines of last year, where you made a sequence of adjustments and then waited to gather more information?
So the way I've been thinking about it is the risks to the two goals. For a very long time, the risk was clearly of higher inflation. And then that has changed now. And as we saw particularly after the July meeting, we saw the downward revisions in job creation, we saw a very different picture of the labor market, and it suggested that there were higher downside risks to the labor market than we had thought. And that suggested that policy, which we had been holding at a I would say modestly, people would say moderately restrictive level, needed to move more in the direction over time of neutral. If the two goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one of them's calling for you to cut. So if that got back into balance, then you'd want to be roughly at neutral. So in that sense, it was a risk management. And I would say the same about today, sort of the same logic. But as I mentioned, going forward is a different thing.
Claire. I'm Claire Jones, Financial Times. Thank you for taking this question. We've just heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more about what sort of arguments were brought up. Was there any consideration, for instance, of the investment we're seeing in AI and some of the generation of household wealth through rises in stock prices related to the AI boom? Thank you.
I wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's the driving factor. I don't think for anybody. I guess I would say it this way. Once again, I would just point out that we have the situation where the risks are to the upside for inflation and to the downside for employment. We have one tool. It can't do both of those. You can't address both of those at once. You've got a very different situation. So you have some people have different forecasts, right? So they'll forecast faster or slower progress on one or the other. And they also have different levels of risk aversion. And some will be more averse to inflation overruns, and some will be more averse to underruns of employment. And so you put that together, and as you can see from the SEP and from the public discussion that goes on between the meetings when participants go out and talk, they're very disparate views. And they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that that we haven't made a decision about December. I always say that. It's a fact that we don't make decisions in advance. But I'm saying something in addition here, is that it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up on QT? How much of the fund impressions we've seen in money markets are related to the U.S. Treasury issuing more short-term debt?
That could be one of the factors, but the reality is we've seen, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking at, what the place we're trying to reach. What we said for a long time now is that when we feel like we're a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened, some things have been happening for some time now, showing a gradual tightening in money market conditions. Really in the last, call it 3 weeks or so, you've seen more significant tightening, and I think a clear assessment that we're at that place. The other thing is, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice, And so there's not a lot of benefit to be, to be holding on to get the last few dollars because, again, with the balance sheets, the reserves are going to continue to shrink as non-reserves grow. So, there was support on the committee as we thought about it to go ahead with this and announce effective December 1 that we will be, freezing the size of the balance sheet. And the December 1 date gives the markets a little bit of time to adapt.
Colby. Thank you, Colby Smith with the New York Times. So much of the rationale for cutting interest rates, even as inflation moves away from the 2% target, seems to be, that there are these mounting downside risks to the labor market. But if those don't materialize and the labor market either stabilizes around current employment levels or even starts to strengthen somewhat, how would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about underlying inflation and the possibility of second-round effects from tariffs?
Yeah, I mean, in principle, if you were to see data that suggested that the labor market's strengthening or even that it's stabilizing, that would certainly play into our decisions going forward. So, we do have, we get some data. The labor market is a place where we get, for example, we get the state-level data on initial claims, which are sending a sort of a signal of more of the same. We also get job openings. And we'll get lots of survey data. We'll get the Beige Book and things like that. So we'll have a picture of what's going on in the labor market, and the fact that we're not seeing an uptick in claims or a downtick really in openings suggests that you're seeing maybe continued very gradual cooling, but nothing more than that. So that does give you some comfort.
But if this shutdown lasts a while longer and you don't have that data in hand, I'm just wondering how that hinders the committee's ability to assess the state of the labor market and make the right policy decisions, and also how much is that factoring into the debate about December?
Yeah. So we get like I mentioned what we get in the labor area. We get some data in inflation, some data in economic activity. And we'll have a picture of what's going on. We also will have the Beige Book again. I would say we're not going to be able to have the detailed feel of things. But I think if there were a significant or material change in the economy one way or another, I think we'd pick that up through this. So in terms of how it might affect December, it's really hard to say. December's the meeting's like 6 weeks away. We just don't know what we're going to get. If there is a very high level of uncertainty, then that could be an argument in favor of caution about moving, but we'll have to see how it unfolds.
Steve.
Steve Leisman, CNBC. Mr. Chairman, can you characterize the meeting in terms of, you said strongly differing views. Was this a close call, this cut, or was it a close call maybe the other way because you had dissents on both sides? Thanks.
So I was referring to the discussion about, to the extent it related to December. You saw we had 2 dissents, one for 50 and one for no cut. So, that was a strong, solid vote in favor of this cut. The strongly differing views were really about the future. What does that look like? And I think people are saying, they're noticing stronger economic activity. Forecasters generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances, and so there's you read the SEP, you read the speeches, there are differing views on the committee, and to the point where I said what I said.
And just to follow up on the balance sheet, if you stop it, the runoff now, does that mean you have to go back to actually adding assets sometime next year so that the balance sheet doesn't shrink as a percent of GDP and become a tightening factor?
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in Treasury bills, which will foster both a more Treasury balance sheet and also a shorter duration. So that's what. In the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long. But at a certain point, you'll want to start reserves to start gradually growing to keep up with the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then, we didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be right now it's got a lot more duration than the outstanding universe of Treasury securities. And we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding Treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually. I don't think you'll notice it in market conditions, but that's the direction of things.
Janelle.
Janelle Marte with Bloomberg. How are officials interpreting the latest CPI report? So some components came in lower than expected, but core inflation was still at 3%. So at this moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake on employment or inflation?
So the September CPI report, we didn't get PPI after that, which is important for translation into what we look at, which is PCE inflation. But we can still make a pretty good assessment of what that will be. When we get PPI, there might be some adjustments. But so directionally, it was a little softer than expected, and we always break it down into the three components. So basically, you've seen goods prices increasing, and that's really due to tariffs. And that's compared to a longer run trend of very, very mild deflation in goods. So that's moving inflation up. On the other side of that, good news that housing services inflation has been coming down and is expected to continue to come down. So if you remember a couple of years ago, that's the one that we kept expecting it to do that. Now it's been doing that for some time, and we expect to continue that. That leaves the biggest category is services other than housing services. And that's kind of been moving sideways over the last few months, but a significant part of that is non-market services, and we don't take a lot of signal about the tightness of the economy from that. So if you add all that up, a couple things to say. One is that inflation away from tariffs is actually not so far from our 2% goal. We estimate, people have different estimates of what that is, but it might be 5 or 6 tenths, and so that if it's 2.8, then core PCE, not including tariffs, might be 2.3 or 2.4 in that range, something like that. So that's not so far from your goal. So that we look at that, and the thing about tariff inflation is the base case is that it will come, and it probably will increase further. But it is that it will be a one-time increase. And we've been very focused for all of this year at making sure that that's the case and thinking carefully about what are the pathways through which it could become something else, troublesome inflation. One of those would be a really tight labor market. We don't see that. Another could be inflation expectations moving. We don't see that. So I think we're watching this very carefully. I think it's not the case that we're just assuming that it's going to be a one-time inflation. We understand fully that this is a risk we have to monitor and ultimately manage.
With the stubborn in services inflation, what are some of the things that the Fed could do to address that, and especially when we're seeing potentially labor supply challenges?
Sorry, say the first.
The stubborn services inflation that you mentioned.
Services inflation, yeah. Well, again, the part of services inflation that isn't coming down as we would like it to is the non-market part of non-housing services. And overall, that's just something that we expect will come down. The non-market part of it should come down. It largely reflects higher stock prices and financial services that are imputed rather than actually paid is is a big part of that. But also just, we think policy is still modestly restrictive in my telling. So that's the kind of thing that should lead to a gradually cooling economy. That's one of the reasons you see a gradually cooling labor market, is because, the Fed policy is modestly restrictive. So that should also help get that. I want to say, though, we're absolutely committed to returning inflation to 2%. If you look at longer-term surveys or market pricing, you will see that's a credible commitment, and there should be no question that that's where we're going.
Chris.
Great, thank you. Chris Rugaber at Associated Press. So there's a big investment boom in AI infrastructure right now, as you know, and wondering if the existence of such a boom would indicate that rates are not that restrictive after all, and could further rate cuts at this point perhaps fuel an excess level of investment there or market bubbles? How is the Fed thinking about that?
So I don't think that you're right. There are a lot of data centers being built and other investments being made around the country and around the world. Big U.S. companies are just investing a lot of resources in thinking about how AI, which will be based on those data centers, run through those data centers, is going to affect their businesses. So it's a big deal. I don't think that the spending that happens to build data centers all over the country is especially interest sensitive. It's based on longer run assessments that this is an area where there's going to be a lot of investment and that's going to drive higher productivity and that sorts of things. I don't know how those investments will work out, but I don't think they're particularly interest sensitive compared to some of the other sectors.
And then just a quick follow-up. You mentioned that you do have data that you're looking at for inflation and growth in the absence of government data. Could you give us a sense? I think we know a lot about the jobs data that's out there. Can you give us a sense of what you're looking at to track inflation in the absence of government data? Thank you.
So it's a lot of things, and it doesn't replace government data, but you know all of these. I'll just mention some of the many names: Price Stats, Adobe, and others. For wage inflation, there's ADP data. On spending, you're going to ask about spending at some point. There are lots of other things that we look at, but it's many different sources, and again, including what we get out of the Beige Book, which will be sort of come out mid-cycle as always. And it doesn't replace the government data, but it gives us a picture. Again, I think if something material were happening, if there were material developments, I think we would pick that up. I don't think we'll be able to have the very granular understanding of the economy while this data is not available.
Howard.
Howard Schneider with Reuters. Thank you. I just wanted you to elaborate a little bit on what you said a moment ago about a continued shutdown, making it more difficult to make a move in December, and that may make you more cautious. To the degree you are relying on private data that isn't the gold standard, or that you're relying on your own surveys or the Beige Book, do you worry at some point you're going to have to start making policy by anecdote?
This is a temporary state of affairs, and we're going to do our jobs. We're going to collect every scrap of data we can find, evaluate it, and think carefully about it. And that's our jobs. That's what we're going to do. If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that what do you do if you're driving in the fog? You slow down. So that could or could not. I don't know how that's going to play into things. We may get the data may come back, but there's a possibility that it would make sense to be more cautious about moving. I'm not committing to that. I'm just saying it's certainly a possibility that you would say we really can't see, so let's slow down.
As a follow-up in the debate on this meeting, we saw recently some pretty big layoff announcements coming from Amazon and others. Wondering if that figured into the discussion at all, that you're starting to see this tension between growth and employment starting to be resolved, to the detriment of employment. And secondly, some of the stress is starting to appear in the bottom spur of the K, as they call it, household health premiums that are going to be possibly be going up quite substantially, things like that. Has that started to become a factor in your policy discussion?
So those are those are both things that we're watching very, very, very carefully. To start with the layoffs, you're right. You see a significant number of companies either announcing that they are not going to be doing much hiring or actually doing layoffs, and much of the time they're talking about AI and what it can do. So we're watching that very carefully, and yes, it could absolutely have implications for job creation. We don't really see it in the initial claims data yet. Now, it's not a surprise that we don't. It takes some time for it to get in there, but we're watching that really carefully. But again, don't see it yet in the initial claims data. On the K-shaped economy thing, I would say the same thing or similar thing. We are, if you listen to the earnings calls or the reports of, big public consumer-facing companies, many of them are saying that there's a bifurcated economy there, and that consumers at the lower end are struggling and buying less and shifting to lower cost products, but that at the top, people are spending at the higher income and wealth, and so much anecdotal data on that, and so we think there's something there.
Edward.
Thank you, Edward Lawrence with Fox Business. So, Mr. Chairman, I want to take another crack at the further reduction of rates is not a foregone conclusion. So in December, you said far from it. So if a cut might not be on the table for December because of lack of data, what does the other concerns then stem from? So if it's not lack of data as the reason December is not a foregone conclusion, what other things could be the concern then? Well, the perspectives of people on the committee that, we've now moved 150 basis points, and that we're down into, you're into that range between 3 and 4 where many estimates of the neutral rate live in that 3 to 4% area. You're there now. You're above the median number for the committee, but I think there are people on the committee who have higher estimates of the neutral rate, and that's you can argue these positions since it can't be directly observed, the neutral rate. So, I think for some part of the committee, it's time to maybe take a step back and see whether there really are downside risks to the labor market, or see whether in fact the growth that the stronger growth that we're seeing is real. Ordinarily, the labor market is a better indicator of the momentum of the economy than the spending data. That's the lore. In this case, that gives a more downbeat read. So people just have, again, we've cut 50 more basis points in the last 2 meetings, and there was a sense like, from some, let's pause here, kind of thing, and a sense from others wanting to go ahead. But that's why I say differing views, strongly differing views. And so on that division, then you're talking about going forward. So what's more important in this division? Is it inflation risks? Is it employment risk? Or is there a deeper philosophy division among the board?
Look, everybody on the committee is deeply committed to doing the right thing to achieve our goals, maximum employment and stable prices. You have differences on how to do that. And as I mentioned, some of that is different forecasts, but a lot of it is also different risk aversions to the different variables, which is common through all Federal Reserves. People just have different risk tolerances, let's say. So that leads you to people with disparate views. You will know that from the speeches you've been listening to from my colleagues. And so we're at a place now where we have, in fact, cut 2 more times. And, we're 150 basis points closer to neutral, wherever that may be, than we were a year ago. And so there's a growing chorus now of feeling like maybe this is where we should at least wait a cycle, something like that. That's what it is. It's just what you think it would be. It's and again, you've seen it in the September Summer of Economic Projections. You've seen this in the public remarks of FOMC participants, and now I'm telling you that's what you can expect that in the minutes. And I'm just telling you that's what happened in the meeting.
Elizabeth. Thank you. you so much. Liz Scholze with ABC News. What is your explanation for why the job market is weakening right now, and what will this rate cut do to improve the job market?
So I think there are two things affecting the job market, and one of them is just a dramatic reduction in the supply of new workers. And that's two things. That's declining labor force participation, which is a cyclical thing, and then there's declining immigration, which is just a big policy change that actually began in the last administration and it has been accelerated now. So a big part of the whole story is that supply side story. Okay. In addition, labor demand has declined, and the unemployment rate has gone down, meaning that demand for workers is going down a little more than supply. So that's what's going on, but it is mostly a supply function. It's mostly a function of the change in supply, I think, and many people think. So the question then is, what does the our tool do, which supports demand? And and I would just say, when you're in a situation where job creation, if you adjust for likely overcounting in the way that BLS does its work, is pretty close to zero. So maximum employment doesn't, on a sustainable basis, if you're creating zero jobs, if it's in equilibrium, if it's in balance, it's a pretty, as I said before, a pretty curious balance. So, I thought, and many of my colleagues thought, in fact, you've seen the last two meetings, that it was appropriate for us to react by supporting demand with our rates. And we've done that. We've reduced so that rates are looser. I wouldn't say that they're accommodative right now, but they're meaningfully less tight than they were. And that should help so that at least the labor market doesn't get worse. Though it's a complicated situation, and some people argue that this is supply and we really can't affect it much with our tools, but others argue, as I do, that there is an effect from demand and that we should use our tools to support the labor market when we see this happening.
You also talked about tariffs causing a one-time price increase. Should American household consumers expect that inflation will continue to go up this year because of those tariffs?
So the basic expectation is that there will be some additional increase in inflation because it takes a while for tariffs to work their way through the production chain and finally get to consumers. And we see this now from the tariffs that were put in place now many months ago. We see those effects, but if you put tariffs in effect, and they've been coming into effect consistently in February, March, April, May, and that's all happening. So that'll continue to happen for some time, probably into the spring. These are not big increases, though. These are a tenth or so on inflation. They may be big increases on a particular product that's been tariffed, but overall, these are fairly modest. I think some projections go, we're at 2.8% inflation. You might get 2 or 3 more tenths or 4 more tenths maybe. But then, as all of the tariffs are in, they stop generating inflation. You've had a one-time price increase. As long as you're not, at least this is the theory, this is how we believe and hope that it will work out. Once the last tariff is put on something, at that point, it becomes a higher price level, but it stops going up, if you will. Prices stop going up. They'll just be at that level. And then measured inflation will come back down to non-tariff inflation. As I mentioned, non-tariff inflation is not so far from 2% now. Now, consumers are not interested in that story. Their prices are higher. More than that, the reason they're so unhappy about inflation is the inflation that we had in 2021, 2, and 3. Because you can say that prices aren't going up as much, but that doesn't mean people aren't feeling those higher prices from the inflation we had 2 or 3 years ago. They are, and that's, I think, a large part of why the public, if you sample people, inflation is still very much making people quite unhappy. Even, and it's nice that, that prices are not going up as fast as they were, but they're still much higher than they were. And it'll take some time for that effect to wear off. As real incomes rise, it will feel better over time, but that's going to take time.
Michael McKee from Bloomberg Television and Radio. Do you have any concerns that equity markets are or are close to being overvalued at this point?
When don't look at any one asset price and say, hey, that's wrong. You know, it's not our job to do that. We look at the overall financial system, and we ask whether it's stable, whether it could withstand shocks, right? So, you know, banks are well capitalized, while some households are clearly under stress. In the aggregate, you know, households are in good shape financially, relatively manageable levels of debt. At the lower income spectrum, you are seeing rising defaults, particularly around subprime auto, but nonetheless, in the aggregate, pretty good. You don't see too much leverage in the banking system or the financial system. It's a mixed picture, but it's not an overly troubling picture. And again, I'm not, you know, it's not appropriate. You know, we don't set asset prices. Markets do that.
Well, you must be well aware that by lowering interest rates, you're contributing to additional asset price increases. And I wonder how you balance the idea that lowering rates would help the labor market with the reality that it seems more likely to be stimulating increased investment in AI, which is the rationale for thousands of job cuts that have been announced in the last few weeks.
Yeah, I don't think interest rates are an important part of the AI of the data center story. I think, you know, people think they're great economics in building these data centers, and they're making a lot of money building them, and they think they have very high present value and all that sort of thing. It's not really about. It's not you know, about 25 basis points here or there. You know, we use our tools to support the labor market and to create price stability. That's what we do. That's our two jobs, right? So we're here to, by lowering rates at the margin, that will support demand, and that will support more hiring. And that's why we do it. Now, no 25 basis point or even 50 basis point hike is going to be a dispositive thing, but ultimately, you know, lower rates will support more demand, and that'll support hiring over time. And of course, we also have to be careful about this, which is what we've been doing, because we know where inflation is, and we know that, you know, I've told you the story. It's a complicated story, but this is the best assessment that we can make. But you know, because there's uncertainty around inflation and the path ahead for inflation, that's why we're going. That's why the pace we're going has been a careful one.
Victoria. Hi, Victoria Guida from Politico. On AI, I'm just wondering, you know, it seems like a lot of the economic growth that we've been seeing is fed by investments in AI. So how worried are you about what a sudden contraction in tech investment would mean for the overall economy? Is there enough strength in other sectors? And specifically, are there any lessons that you take from the 1990s in how you might approach what's happening right now?
Yeah, this is different. In the sense that the companies that are so highly valued actually have earnings and stuff like that. So if you go back to the 90s and the dot-com, these were ideas rather than companies, and you know so there's a clear bubble there. Whereas I won't go into particular names, but they actually have earnings, and you know it looks like they have business models and profits and that kind of thing. So it's really a different thing. You know, the investment we're getting in equipment and all those things that go into creating data centers and feeding the AI, it's clearly one of the big sources of growth in the economy. Consumer spending also, though, has been, you know, is much bigger than that and has been growing and has defied a lot of, you know, negative forecasts, continuing to do so this year. Consumers are still spending. Now, it may be mostly higher-end consumers, or maybe skewed that way. But the consumer is spending, and that's a big chunk of what's going on in the economy, substantially bigger than AI. You could point to growth. I mean, actually, you may be growth as opposed to level, but consumer spending is a much bigger part of the economy.
And why do you think that the labor market is slowing so much, even though consumer spending is strong?
Why has it slowed so much? Well, what's happened is that the supply of workers has dropped very sharply due to mainly immigration, but also lower labor force participation. So, and that means there's less need for new jobs because there isn't this flow into the pool of labor that, you know, where people need jobs, because there aren't those people now. So there's not a supply of workers showing up for jobs. In addition, demand has also gone down, and so has labor force participation has declined, which is more of a sign, in this case, of demand as well as trend. So I think you're seeing some softening. You know, the economy's growing at a slower rate than it was, 2.4% last year. We think around 1.6% this year. It could have been a couple of tenths higher if not for the shutdown. And of course, that will reverse. But, you know, you still got the economy growing at a moderate pace.
Andrew.
Hey there, Andrew Ackerman with the with the Washington Post. I wanted to ask if you could elaborate on how you think about policy in the context of the data drought. Does it make you inclined to stick with your plans as set out in September in the absence of the data that might change your mind, or does it make you inclined to proceed with added caution because of uncertainty?
Yeah, well, we'll know when we face that question, if we face that question. You know, it'll probably be argued both ways, right? But I've said a couple times here that, you know, if you really aren't getting information you really don't know, and the economy looks like it's solid and stable and hasn't really changed, you know, there will be an argument. I don't know how persuasive it will be, but there will be an argument that, you know, you slow down when you can't see as far ahead. Others may argue, I mean, I'm not sure where this argument will come up, but you're perfectly right that you could also argue, well, things haven't really changed, but you might not know that, you know. So I don't know whether we'll face this or not. I hope we don't. I hope by the time of the December meeting we're getting, you know, a better flow of data. But if we're going to have to do our jobs one way or the other.
Okay. I also just wanted to ask a FinReg question. I think several years ago you said the overall amount of capital in the system was about right. As the Fed moves forward with a revised Basel proposal, potentially changes to the GSIB surcharge, has that changed at all? Or are you planning to significantly reduce the amount of capital in the system? Thanks.
So there are discussions going on, I think, among the agencies, and I don't want to get ahead of those discussions. I continue to think that the level of capital, when I said that in 2020, was about right. And of course, there's been much capital added since then through various mechanisms. But you know, I look forward to I know those discussions are really just getting going. They haven't come to the point where they're, you know, where they're got a whole plan and that kind of thing. So I really don't have much to say on that.
Brian.
Hi, Chairman Powell. Brian Chung with NBC News. Is the weakness in the jobs market accelerating, and who's at risk if the interest rate cuts are not the effective medicine for a further slowdown in the labor market?
So we do not see the weakness, as you put it, the weakness in the job market accelerating. I would say, then again, we didn't get the September employment report, payroll report, but we look at, you know, the unemployment insurance claims, initial claims, are reported at the state level, and we still get those, and we can accumulate them and get the national number. And there's really, I mean, no story. You can look at the numbers. Same thing with the job openings we get from Indeed. There's just no story over the last 4 weeks. It's kind of stable. So you don't see anything that says that the job market is, or really any part of the economy is making a significant deterioration. Don't see that. You see more things like I mentioned, though, which is you know, you see big companies making announcements of either of layoffs or of the idea that they won't need to hire. Their number of employees is not expected to go up over a number of years. There may be different people working there. They say that too, but they don't need a bigger head count. So you see those kinds of things. You don't see it in the aggregate numbers. The layoff numbers have not gone up, but job creation is very low. And the job finding rate for people who are unemployed is very low. But the unemployment rate is very low as well. 4.3% is a low unemployment rate.
So as you make these cuts, is it the lower income workers that you're thinking about, or those who might have their jobs automated? Is there a particular section of the labor market that you're particularly?
So we can't, our tools don't allow us to target any demographic or any income level and that kind of thing. I do think that people, you know, we saw this during the global financial crisis and the long recovery. If you have a long period of very strong labor market conditions, it benefits people at the lower end the most. The last 2 or 3 years of that long expansion people at the lower part of the income spectrum were getting the biggest benefits, and lots of things were happening in that space demographically, which were very constructive. And we're not at that place right now. But so, yeah, a stronger labor market is the best thing we can do for the public. It's also part of our job. It is half of our job, but it is absolutely the best thing we can do for people. Along with keeping prices stable. Those two things. Inflation also hurts people on fixed incomes more than other people.
Courtney. Hi, Chair Powell. Courtney Brown from Axios. As you know, the 12 Reserve Bank presidents' terms are up for renewal at the end of February. I'm wondering if you can give us a timeline for when the board will consider those reappointments and whether we can expect everyone to be re-upped or if we can expect some changes.
So it's a process that we go through under the law. The way the law works is we have a reappointment process every 5 years for all of the reserve, each of them and all of them. We're in the middle of that process, and we're going to complete it in a timely way. And that's really all I can say.
Okay, thank you.
Daniel.
Daniel Davis, Agence France Presse. You've now had dissents in 3 consecutive FOMC meetings, but in this meeting you had dissents going in both directions, and you've just mentioned there's strong disagreement over the future path of rate cuts. Have these disagreements complicated your role presiding over the FOMC meetings, and if so, how?
I wouldn't say that, no. I think you have to take what comes, and what comes right now is a pretty challenging situation where we have, first of all, we have 4.3% unemployment. We have an economy that's growing close to 2%. So, overall, it's a good picture. It's a good picture. But in terms of our policy, we have upside risks to inflation, downside risks to employment, and this is a very difficult thing for a central bank because, one of those calls for rates to be lower, one calls for rates to be higher. We can't do both, so we have to balance the two. And so it's a challenging thing, and as we have worked our way through this process, you would expect that there would be a range of views across the committee on what to do and the speed with which we should do it. And that's what we have. That makes a lot of sense to me. All of these people are, people who take their jobs very seriously, work very hard at this, and just want to do what's right for the American people, but they have different views on what that is. And, it's an honor to work among people who care that much. It is, but I don't feel that it's unfair or anything like that. It's a time when we're making quite difficult judgments in real time, and I believe we'll get through this. And I think we've done sort of the right thing so far this year. I think it was appropriate for us to be careful about this. I think it would not be appropriate to just ignore or assume away the inflation issue. At the same time, I think the risk of higher, more persistent inflation has declined significantly since April. And if we do wind up resuming rate cuts at some point, we will at some point. I think we're trying to get to the end of this cycle with the labor market in a good place and with inflation, on its way to 2% or at 2%. So that's all we're trying to do, and we're doing it under, quite challenging circumstances and doing the best we can.
We'll go to Jennifer for the last question.
Thank you so much, Chair Powell. Jennifer Schonberger with Yahoo Finance. Both regional and large banks have taken losses on loans given delinquencies on subprime auto loans. JP Morgan CEO Jamie Dimon warned, when you see one cockroach, there may be more likely. I'm curious how the Fed is looking at these loan losses and if it poses risks to the financial system or the outlook for the economy. Is it a warning sign?
So, we're obviously, we watch these things very carefully, credit conditions very carefully. You're right. You've seen rising defaults in subprime credit for some time now, and now you've seen a number of subprime credit
So guys, that is actually last question Mr. Powell is taking. I got to go drop my daughter to her extra classes, but I'll be back in 15 minutes. If you want to hear the imbalance, hang around, but I'll leave the stream on just to see, right, how we finish that helps us for tomorrow. So I'll be back in 10-15 minutes. You can hang around if you want to hear the imbalance. The news service, I just switched it on. I closed Powell because if I leave and then the music starts playing, I will get a copyright strike. There's no copyright strike listening to Powell, but if there is a background music, some other video starts in YouTube, I'll get a copyright strike. So I'll be back in 15-20 minutes. Hang around for the imbalances. Chat with each other. I see you guys, you are making thousands of dollars, hundreds of thousands of dollars. So chat with each other. The news service is on in the background, and I'll be back in 15 minutes. Thank you.
And Powell has ended the press conference. According to the Financial Times, UK's Chancellor Reeves looks at an early scrapping of windfall tax on UK oil and gas sector. We have posted the FT article on the feed for those interested. 1 minute now until we get the market on close imbalance. Ten seconds. Market on close imbalance. S&P 500 buy side 1.5 billion. Nasdaq 100 buy side 1.2 billion. Dow 30 buy side 940 million. Mag 7 buy side 763 million. So just keep in mind, in 5 minutes past the top of the hour, we're expecting a slew of corporate earnings to come through on the wires, 3 of which are Magnificent 7 names. So big tech heavyweights reporting after the closing bell today. First off, Microsoft printing Q1 2026 earnings, estimated EPS of $3.67 and an estimated revenue of $75.55 billion. We also, at the same time, have Meta printing Q3 25 earnings with estimated EPS $6.74, estimated revenue $49.58 billion, and Alphabet printing at the same time as well, estimated EPS $2.26 with an estimated revenue of $85.1 billion. Also expecting earnings from Starbucks and eBay around the same time as well. So again, the earnings reports that are slated are all due to come out at the same time. We'll be prioritizing, of course, the magnificent 7 names with posting out onto the feed. So 10 minutes away now from those aforementioned earnings reports. Microsoft, Meta, Alphabet, all reporting earnings around 5 minutes past the top of the hour. Also expecting earnings from Starbucks and eBay as well.
Sorry guys, there was some traffic. Heard the imbalances? 1.5 billion the buy side on S&P, 1.2 billion buy side on the Nasdaq. Dow also 958 million, almost a billion on the buy side. Magnificent 787 million buy side. Markets are strong. We don't want to lose the upper edge of the expected move. Nasdaq, ES almost kissed the upper edge of the expected move and backed off for the FMC. Dow is still weak, is still a candidate to come back to the midpoint, and Russell must be below the midpoint. Yeah, well below the midpoint, candidate for lower edge for tomorrow maybe. So since I made you wait, let's see how many of you are still watching. I can hang around for a few more minutes now for you to hear any earnings report or something, right? There must be lots of earning coming out. Earnings time, yeah. Still here. Still see 183 people still live. My goodness. I can replace myself with a bot one day. Google, Meta, Microsoft, they report earning. Yeah, let's see. Yeah, I mean, everything is priced to perfection. Rate cuts, contraction of balance sheet, earnings, AI, mergers, AI, everything super good. So I think Russell has taken quite a bit of hit today. Russell is down 1%. Dow Jones is down 0.2%. ES is basically flat right now. Here's the closing bell, and
So we are now on the closing bell, brings us 5 minutes away to the earnings reports that we're expecting this evening. Microsoft printing their earnings, estimated EPS $3.67, estimated revenue $75.55 billion. Meta, estimated EPS $6.74, estimated revenue $49.58 billion. And Alphabet, estimated EPS $2.26, and an estimated revenue of $85.1 billion. So again, earnings reports expected in around 5 minutes' time, though it is worth noting these are tentative. They can come out a bit earlier or a bit later. We've got our eyes peeled.
Morris, you're buying 600 contract long. That's the new standard of the Profom, 600 contracts. Full leverage with 20 accounts. Have a nice evening, mindful trader. Thank you so much for joining us today. Yeah, I generally don't trade earnings, guys. You know, it's binary. But yeah, I can hang around for 5 more minutes. As I mentioned, right? I made you wait, so I can hang around for you to hear the earnings and see the reaction. We'll see Microsoft where it is positioned for the earning. So these are our levels on Microsoft right now, well above the midpoint. Throughout the day held our new paradigm level, guys. This is our new paradigm level. You can see right throughout the day did not lose our new paradigm level. Umpteen number of touch. And you all know the drill, right? Masters level, new paradigm level, they always act as a launch pad for the big
Early
move.
release of Alphabet earnings, EPS a beat, $2.87, an estimate of $2.26. Revenue a beat at $102.35 billion on estimates of
Already hitting the upper edge.
$99.85 billion. So beats on headline EPS and revenue. CapEx a beat, $23.95 billion, an estimate of $22.38 billion. Revenue ex TAC, $87.47 billion, which is a beat on estimates of $85.11 billion. YouTube ads revenue a beat, $10.26 billion on estimates of $10.03 billion. Google ad revenue a beat, $74.18 billion, estimate $72.46 billion. Google Cloud revenue, $15.16 billion, a beat on estimates of $14.75 billion. Google Services revenue, $87.05
Microsoft
billion,
dumping.
on estimates of
Microsoft
$84.67
dumping.
billion. And Google Search and other revenue, also a beat, $56.57 billion, on estimates of $54.99 billion.
Microsoft almost
Beats
came to the
across the
midpoint.
board from Alphabet here in post-market trade. The shares are up around 3.7% now.
So yeah, Alphabet went up. Yeah, cracking above the weekly expected move upper edge also, because there's a daily high over there. Google, Alphabet going for the daily high. Well above our
Microsoft
weekly
earnings coming
expected
through
move upper
now.
edge.
Revenue, that's a beat, $77.67 billion on estimates of $75.55 billion. Intelligent cloud revenue, $30.9 billion, estimates $30.18 billion. Quarterly cloud revenue, $49.1 billion.
Microsoft not doing well, guys. Microsoft taking the downside direction.
Azure and other cloud revenue X 4X plus 39%, beat on estimates of plus 37.1%, and EPS $3.72. The estimate was $3.67. That's a beat.
So yeah, Microsoft coming right into the daily low. That is what at least for the day was priced in. It is going for the lower edge. Google went for the upper edge. What else is there? Meta is there now. Let's check on Meta. Meta is midway.
Microsoft shares fall 4% after fiscal first quarter earnings report.
Yeah, Microsoft dumping, going for the daily low. This is our daily
Alphabet
low.
notes they had double-digit growth across every major business. The Gemini app now has over 650 monthly active users.
Yeah, Microsoft dumping, guys. One up, one down so far. How about Meta? Meta yet to release.
Forward guidance from Alphabet now. They see their fiscal year capex at 91 to 93 billion. They previously saw about 85 billion, so that's a beat there.
So yeah, Google going crazy, guys, here. Well above here. Post market.
Meta
Well above.
earnings coming through on the wires now. EPS at $1.05 against $6.03 year over year. Revenue is a beat though, 51.24 billion on estimates of 49.59 billion. Family of apps operating income 24.97 billion, in line with estimates. Operating income 20.54 billion, which is up 18% year over year.
Meta also
Reality
dumping,
Labs
guys. Meta
operating
dumping.
loss 4.43 billion, estimated loss of $5.16, so a shallower loss than expected. For forward guidance, Meta sees their Q4 revenue about 56 to 59 billion, which is in line with the prior estimate of 57.38 billion.
Let's try a shot. Why did I try? I don't play earnings. I don't play. I mean, two are towards the downside, guys. Two are towards the downside. So what do you think? Like Microsoft, Meta pulling the market down. Google actually is two tickers, right? Google Class A and Class C shares. There are two tickers. So I might get stopped out here. But anyway, making few bucks here doesn't hurt. Two towards the downside, one towards the upside. Meta is coming right back down, guys. Let the dump begin. Yeah, Meta coming right inside, going for the lower edge, guys. Let's check on Microsoft. Did it hit the lower edge? How long this blue line or the pink line will last? Okay, here it is. I have to zoom it in. Yeah, guys, look at that. Straight going for our daily low, and then the weekly expected move lower edge right over here for Microsoft. Google upside, right? Hit the upper edge already, hit our daily high. Google took the upside route, and Meta continuing to dump. Meta is actually getting hammered more. It is down 6.7% more than Microsoft. This is good, guys. This is good for the Nasdaq. Nasdaq now coming back down. Look at that Nasdaq selling. I told you, right? 2 miss is enough to pause this rally, whatever was going on. But by the time conference calls start, they might again buy it back up. So don't get all bared up. Take your profit. If it drops more, good. Leave a runner. But yeah, things can change with the conference call, which will begin I think at 4:30 or something. Big miss on Meta. Yeah, it's 8% down, 8%. Still not hit our weekly expected move lower edge, guys. It was big move which was expected in Meta. It's still coming down. Still more room. There's a daily low. See, what you're witnessing is even in this extreme volatility, right? You can see, right, how the targets are getting tagged perfectly. You're getting small reaction each time from each of this target. That's our daily low, and final low is here. We have conference call and we'll be back to all-time highs. Yeah, Nasdaq still positive, guys. Nasdaq is still positive, has not turned red yet. So that's Meta giving reaction of our daily low. That is our experts level, guys. This is new paradigm group member level. This is not with the masters members. This is for the new paradigm group. Microsoft retest of the midpoint, and we lose midpoint, we come into the daily low, just like Meta. Meta already here. But Meta is, I think, the one which is exciting to watch right now. Down 7% right now. Bring it 50 more points. So you want to check on Nasdaq, how we are doing on Nasdaq. We can see ES is unaffected. Who cares, right? It's tech
So Mag
earnings.
7 names are out the way for now then by the looks of it. Meta shares just sliding its spot 7% following their third
Still at
quarter
your
earnings.
new
They see
paradigm level,
lower
guys.
year-over-year Reality Labs revenue in Q4. Quite a lot of forward guidance misses from Meta platforms here. Moving on now to Starbucks, though. Their net revenue, that's a beat at 9.6 billion, an estimate of 9.34 billion. Adjusted EPS a miss, 52 cents on estimate of 55 cents. Comp sales plus 1%. The estimate was for negative 5%. North American comp sales flat at 0%. Estimate was for negative 0.53%. China comp sales plus 2%. Estimate was for plus 1.6%, so that's a miss. International comp sales plus 3%, a beat on estimate of 1.75%. US comp sales a miss at 0% on estimate of 0.03%.
So yeah, Nasdaq yet to
Their
cross the
fourth quarter comparable
lows
transactions plus
from
1%, a
FOMC.
beat on estimate of minus 1.14%, and adjusted operating margin 9.4%, an estimate of 10.2%. Now moving on to eBay. Net revenue was a beat at 2.82 billion, an estimate of 2.73 billion, and adjusted EPS continued operations was $1.36, I should say, a beat on estimate of $1.34. Active buyers a miss 134 million, an estimate of 135.12 million.
Look at that, guys. Again, to the penny reaction from new
They see
paradigm.
their fiscal year adjusted EPS continued ops at $5.42 to $5.47.
Guys, right?
And
Even
since
in the
their
volatility,
fourth quarter EPS continued operations $1.31 to $1.36, a miss on the prior estimate of $1.39. eBay shares slipping 4%.
yeah, even in that volatility, you can see, right? It doesn't need to tag to the penny like that, right? Tag to the penny rejection, even meta bounce, it is from our daily low. Again, to the penny. Why, guys? The thing is down 8%. Who is going to question? Nobody is going to come and question RDGD levels. I can simply, get a reason, an excuse. Hey, it is 8% down. So my level missed by 3 points. Okay, live with that. No, not even a single tick miss there. Down 8%. Not even one tick, left behind. Yeah, Microsoft also rejecting. Still at the midpoint. Microsoft is neutral right now for the week. Alright guys, so we'll call it a day. Nasdaq did not break the FOMC low. That's the bottom line. We had a down movement. At least we did not fly high. But it's Google who's still the show for the earnings. Is the superstar. Up 4%, sitting right at our weekly expected move upper edge, and above that our daily high. That is what market had priced in for today. Movement on Google. We have achieved every ounce of that movement. Market had priced in Meta for the downside. This edge, we have achieved every ounce of that movement. Look at that. Ahead of your weekly expected move lower edge. Daily low came into play. And Microsoft right at the midpoint, right? Leaving right at the midpoint. Right over here. Microsoft leaving you right at the midpoint. No change. Same spot where we left off last Friday. Thank you so much, guys. Have a nice evening. I'll see you back tomorrow morning. Take care and bye-bye. Joke. Don't be a dick for tick. In this case, we can be dick for a tick. It did hit to the tick. But guys, hope you enjoyed everything what we did here. A great session with FOMC, and looks like everyone enjoyed the earnings. They made a lot of money. I made few bucks. But I am not an earnings guy, guys. I don't play earnings. Especially in the funded account, personal account, it's very risky for me to play earnings. If it drops more, I can buy long-term account, but no tactical play on the earnings. Have a nice evening, guys. Take care, relax, rest. See you back tomorrow morning. Bye-bye.